class by our experienced speaker, Chandrasekhar Narayan Vaje sir. Before moving forward, let me play a motto song. No need to stand up, just place your hand on your heart.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रदब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. Now I request C.S. Sita Sirin Madam Chairperson to give her opening remarks.
Respected today's resource person, C.A. Vaje Chandrasekhar Narayanan, my colleagues at Managing Committee and other fellow members, a very good evening to one another. My hearty welcome to you all for the VCM on Code of Ethics and Disciplinary Mechanism with practical cases. Members, as you all know, since the primary duty of the auditors extend towards intended users, it is crucial to act professionally and ethically. The Code of Ethics of the Institute set out standards of ethics for chartered accountants to meet their responsibilities as well as acting in the public interest. It contains provisions which guide the members in the situation of ethical dilemmas while discharging professional duties. Our speaker today will cover a range of relevant practical problems, including auditor responsibilities which adhere to the Code of Ethics and the disciplinary measures that the ICAI has taken when such non-compliance occurs. Make use of today's session. Thank you, Vanilla.
Thank you, madam. Let me say a few words about our speaker, Chandrasekhar Narayan Vaje, Mulund, Mumbai, BCom, FCA, ACS, LLB, practiced as a chartered accountant since 1980 for more than 40 years. Active participation in the work of many professional bodies of CS, delivered lectures and written articles on taxation, banking, and all allied subjects. Also on Code of Ethics of CS, delivered lectures and written articles on Valmiki, Ramayana, Mahabharata, Bhagavad Gita, and many other social subjects. Anchored musical and other cultural programs. Actively connected with arts and literatures. Directed plays in Sanskrit language and also worked for promotion of Sanskrit language. President of Maharashtra Sevasan Mulund, 84 years old reputed organization. President of Sanskrit Bharati Konkan region. Director and ex-chairman of Janakalyan Sahakari Bank Limited. Held many responsible positions in many organizations. Recipient of Yoga Mitra Award from Yoga Vidyaniketan, Vashi, Navi, Mumbai. Recipient of Best Social Worker Award from Senior Citizens Association, Mulund. Recipient of Jal Dastar Award for Best Feature in VCA Journal. With this brief, I hand over mic to our speaker.
Yes.
Over to you, sir.
Thank you very much. Yes, thank you very much. I'll first adjust the screen so that we can continue.
Sir, 1 minute, sir. Our Kakinada branch chairman is with us. Sir, you want to address our members?
Sorry. Thank you, ma'am. Thank you for giving me a great opportunity. Actually, today we had an excellent faculty because just by hearing philanthropic as well as having background of the Ramayana, Mahabharata, and all other social activities also is having his personal. This one also very great. He's having, and he is from Bombay. No doubt he will definitely give us a great and very excellent code of ethics on today's subjects. Thank you, ma'am. I wish all our members to follow the guidelines of the code of ethics for giving a great hand to our profession. Thank you, ma'am. Thank you for giving me this opportunity. Thank you.
Please carry on.
Yes, now, yeah, now I'll share the screen so that we can continue. Good evening, ladies and gentlemen. Madam Shitha Shireen, Chairperson of Vijayawada branch, Mr. K. Narayana, who introduced me. Unfortunately, I didn't get the name of the gentleman who spoke in between. I thank him for very kind words of appreciation about me. And friends from Vijayawada. In fact, you will recollect that last year during COVID period, I was invited and gave a similar presentation. So I treat it as a once more for me. Now, the code of ethics as a subject, and which has been rightly made compulsory by our institute in the every year's your study circle lectures, because now it is gaining more and more importance in our day-to-day practice. In good old days, people were not much bothered about the ethics. Not that they were not ethical, they were ethical, but the gravity was not that much felt. But now the times are changing. We are in the Kali Yuga, that is Kali Yuga. So people are fighting with each other. People are bent on harassing others for some ulterior motives. And this disciplinary mechanism is another now weapon in the hands of many unscrupulous people also to harass the chartered accountants. I don't say that the only purpose of code of ethics is harassing, but many of the cases are so frivolous that the purpose is not that they want ethical things, but they want some other motive to be achieved, in the sense that normally all the disciplinary cases arise out of some dispute among other parties. And just to have an edge over the other party, just to harass the other party, it is customary and fashionable to file a complaint against the chartered accountant. Now, in this about 2.5 to 3 hours presentation, I take you through provisions of the Code of Ethics. Before that, a few preliminary remarks, in the sense that Code of Ethics, although it sounds to be a theoretical subject or a philosophical subject, it is not so. It is very much practical. And I will be sharing with you the practical experience of over 300 disciplinary cases which I have handled myself. And therefore, I will try to make this presentation as lively and interesting as possible. And I am sure that you will find a lot of value addition out of this presentation. But some preliminary philosophical things we must know, because we should know the present status of the chartered accountancy profession, what is the purpose, why basically we should be concerned about ethics. So friends, the basic motto of our institute is Ya Esha Sukteshu Jagarti. That means he who is awake when the world around is asleep. That may and in this particular thing which was recommended to us by Maharshi Aurobindo, which is from Kathopanishad, and it means that the person who is awake when the world around is asleep, that should be chartered accountant, and he is compared right up to means something with Brahman or Atman, which is ultimate truth. So CA is very well connected, very closely connected with what is truth. There, even our audit report is also, we write as true and fair. So we are basically concerned with the truth, and therefore this is a very apt motto that we are having for our institute. Now, ethics Friends, the today's position about ethics is that we just write our exam, final CA exam, there is a question of about 16 to 20 marks. And thereafter we don't forget the ethics as such, but we forget the actual rules. Ethics are age-old principles. It's only a set of moral values. Those existed right from the big birth of the human civilization. So it's not that there is something new, but institute has codified it in the context of our profession. That is why it is called Code of Ethics. Otherwise, it is not something very new that has come. Only thing is that it is specially relevant for the chartered accountancy profession, and therefore it is called Code of Ethics and for the chartered accountants. But friends, today's scenario is so vulnerable and chartered accountancy profession has become so vulnerable that anything you do, it invites something or the other in the context of the ethics. There is some default or the other, there is some misconduct or the other, knowingly or unknowingly people are committing. And therefore we need to be eternally vigilant. We have to be constantly awake. Ultimately, awakening is what? We have to be vigilant. So eternal vigilance is the cost of independence. That means if you need to be independent, and the basic foundation of our CA profession, there are twofold things. One is our independent. In fact, our audit report is also entitled as Independent Auditor's Report. So we need to be independent, only then we can do the audit without fear or favor. And if we need to be independent, you have to be constantly awake. For example, the boundaries of our country, our Jawans, our soldiers are constantly, vigilantly guarding it at the cost of their own lives. And that is why we are enjoying this freedom and we are enjoying the peace in our civil life. So likewise, if our profession is not to be attacked by others, by outsiders, we need to be vigilant. And that is why I said eternal vigilance is the cost of the independence. And remember, in the ethics, you are either ethical or unethical. There is no in-between way. Now I will start with the true cases which I have actually dealt with, I have actually handled, so that it will become lively and you will be able to understand the importance of it. Friends, in today's scenario, the work culture, especially after the advent of foreign companies, all these large corporates and even these big firms, the culture is very strange, friends. People are not trusting each other. Therefore, a person who is sitting on the next table in my office, I am expected to interact with him through email. So oral communication now has no value. Everything has to be evidenced and documented. So if at all everything is to be evidenced and documented, then one has to be extremely careful as to what he is writing. And in his writing, if there are even, just because orally somebody tells you, it has no meaning. Ultimately, working papers are important. Everything needs to be documented. Now, why the code of ethics is required is that we should have a proper perception, proper impression about the code of ethics, that it is not a burden. It is not a burden, but it is a shield to protect us. If we follow the rules of ethics, then nobody can afford to, or rather think of harassing us. And therefore, society's expectation from the institute are like this, their complaints are like this, that they say that the institutes take a lot of time in disposing of the complaints, then the punishments awarded are very mild. So the society expects that the code should be very strictly enforced. And that is why, because very foundation of our profession is that the credibility. So first is independence and second is credibility. Credibility will arise only when you are independent. So independence is of supreme importance. Then that only will ensure the credibility, because otherwise if we are not independent, we may compromise on our duties, we may compromise on many things, and therefore, friends, this is important. Now I'll tell you firstly, at the outset, I will also make it clear that I am not very much adhering to the PPT as such, because that PPT you will get it circulated, so that's not an issue. What I want you to carefully listen to is the cases which I have handled, the facts of the cases, and how you are unknowingly caught under the clutches of this disciplinary mechanism. So this is a caution to you. I am aware that this December you have a lot of deadlines to meet, but while meeting those deadlines also, what precautions you should take, what documentation you should make, that is of extreme importance, and that is exactly what I am going to share with you. The first and foremost incident or the case which I always share, and I start with that presentation only, is that husband and wife both were chartered accountants. Both were practicing independently as proprietors and not as in partners. Now the wife did the audit of a cooperative housing society for 3 years. Thereafter, husband did the audit. And in 6th or 7th year, there was a divorce petition between the two. And the wife filed a complaint to the institute saying that the husband, means now ex-husband, took the assignment or the audit assignment without communicating with her. So to that extent, now people are going. That means, friends, first and foremost thing you should keep in mind, no relations are permanent. You should not trust anyone. If you do anything good in good faith, first and foremost lesson is that don't do anything in good faith. If you do anything in good faith, you are sure to invite trouble for yourself. And therefore, friends, my first message to you is that try to be, everything needs to be documented, and remember that all relations are going to end in some disputes or the other, especially if they are for commercial or financial purposes. So business relationships, howsoever close you are, two brothers, two sisters, parents and children, husband and wife, two close friends, two classmates, employer-employee, all these relationships unfortunately end in some dispute or the other, some differences, some friction. And therefore, friends, you be careful that whatever may be the closeness in relationship, you have to have the first documented communication. Now, therefore, I say that the ethics were enshrined in our Indian culture long, long ago, thousands of years ago. According to me, there are 3 messages which in Taittiriya Upanishad, 3 messages were given by the gurus or the mentors to their pupils after their education was over. What were the 3 messages? One was Satyam Vada. Satyam means not your Satyam corporation Satyam, but Satyam is the truth. So speak the truth. Second is Dharmam Chara. Dharma is what? Dharma is the duty. So perform your duty religiously. And the third is Swadhyayatma Pramadaha. That means do not commit any default in performing your duty or in updating your knowledge. So that is CPE. So that means the CPE was contemplated in our country, in our culture thousands of years ago. It is not something like a new concept. CPE was there. They say every year, after completing the 12 years of education under the some sages or the rishis, students were instructed that they should keep updated always and they should continuously upgrade themselves. That is CPE, continuing professional education. These are the 3 foundation stones perhaps for our code of ethics. Now I will share with you another case. First case was, I'm sure you have learned something from that no relationships are permanent. Now there was a chartered accountant who was handling the tax audit of a proprietary concern. And one fine morning, that proprietor client's daughter, who is married daughter, comes to this client, a chartered accountant's office. And she requests that she wants him to attest the ITR of her husband and mother-in-law. Now the chartered accountant asked what for it was required, because he was not actually handling the tax matters of her husband and mother-in-law. So she had brought the hard copy. So he verified. She said it is required for some visa purpose, or she said it was required from bank loan purpose, any reason, valid reason. It was necessarily not the true reason. So he verified it on the computer and he found that yes, it was all right. So he attested it. Now remember friends, there is recent guideline about 2 to 3 years ago, Institute had issued a guideline as to how we should certify this. In the course of telling the stories, I tell you the rules of the ethics. And rules are of the ethics are enshrined in our Chartered Accountancy Act, then guidelines, rules, regulations, and so many other notifications and pronouncements of the Institute. So here there was a guideline which says that basically you should never attest an income tax return simply by saying true copy and your signature, because otherwise the world will take it as if you are certifying the income of that person. Remember that we have no authority to certify one's income. That authority is there only with the income tax department. What we are saying is, this is the income declared by him in his return filed on such and such date. That means one has to give a disclaimer, and how that thing should be worded is given in the institute's guidelines. So the disclaimer has to be there. So he certified it in a proper manner. He gave proper disclaimer also. But when he gave that certificate, within a month's time, he received a complaint from that lady's husband, saying as to how you gave or how you parted with my attested copy of the ITR without my written authority. So I had never authorized you. I had never authorized my wife to collect an attested copy from you. And I had never authorized you to deliver it to her. So how did you give it? So this is the complaint. Now remember, why this complaint was made? Because the wife had filed a case against the husband for domestic violence. Again, I am repeating, good faith, friends. So the next principle that I am sharing with you, firstly, that good faith. Second is professional skepticism. What is professional skepticism? That means that it does not mean that you suspect each and everything, but it only means that you trust but verify. This trust but verify is important. Friends, we are not expected to be fraud detectors. We are not expected to be, you can say, the forensic auditors or investigators. We are doing simply the audit. But earlier, that there was a decision of the Bombay High Court saying that auditors are merely watchdogs and not bloodhounds. But the times are changing. Now the society, the regulators, the government, they expect you to be the bloodhounds only, not merely the watchdog. They expect you to be investigators. There is a change in the perception. There is a change in the people's mind. And the reason is that because now most of the things are done by automation. Therefore, you are expected to focus on the qualitative aspect of the audit. Now, friends, it has been the observation in the banking industry and in many other regulatory circles that in banks, we have so many audits like concurrent audit, revenue audit, stock audit. So many audits are there, internal audit, statutory audit. But there was hardly any occasion where a big scam was exposed by the audit function. You will also agree with this, that then what is the use of the audit? Although it is a fact that audit is not investigation, but at the same time, by some simple techniques, and one of the most important is third-party evidence. But we don't attach that much importance to the third-party evidence. And that is why these standards on auditing are there. Documentation is there. There should be a communication. There should be queries. There should be proper remarks. There should be proper correspondence with the client. All this should be reflected in your audit report. And third-party evidence is a tool to basically certify or basically to confirm that the accounts are to large extent true. I'll deal with that particular matter and by help of another case. But what is the present image, unfortunately, of the audit profession or the chartered accountant? We are not assertive, but we are very accommodating. We try to help out the client and we have constant fear of insecurity. That means our client will run away or go away from us if we don't please him. And we try to please him in every respect. We accommodate, we compromise on our ethics, we compromise on our standards on auditing, we put our signature, we slog for him, and at the time of payment of fees, he dodges us. Still, and that is why we are receiving a very humiliating treatment from all circles, from the clients, from the income tax or the revenue departments, from the government, other bureaucrats. The profession is not commanding the respect that it should command, because probably we have not discharged our duties with that much of vigilance and that much of tenacity, perhaps. And that is why I am saying that with a full sense of responsibility, that we should be very clear as to what is our duty, that we should be clear that our signature commands value. People are taking it for granted. People, they say that किसी सीए को पकड़ के ये कर डालो, that means just catch hold of some chartered accountant and get this done. Remember, the perception among society about the chartered accountancy profession is that these are the people who manage everything. In the sense, and our chartered accountants are really so, in fact, they manage their CP hours also. Nobody sincerely attends any program of CP, especially during this last month, which is a fact. And therefore, friends, our own sincerity, our own truthfulness, our own honesty, and our own discipline should be such that people get a message from that. That is why otherwise people are giving us a very humiliating treatment. They take us for granted. The credibility and respectability, that is why, is diminishing. People don't look upon us at a very high esteem. And therefore, in fact, there was an item in the checklist of a respectable organization, which is very alarming, friends, very alarming. It says, please avoid bringing CA certificates as the same are often found unreliable. Now, this is the comment of a very reputed organization, and for they are issuing visas or they are issuing some other certificates. For that, they said, don't bring CS certificates. If you are aware that whenever you issue certificates about the value of the parents' wealth, especially when for the students who are going abroad for education, that time, the manner in which the assets are created on paper, we are very much aware, and still we certify it. And I am sure that we are not even charging fees for that. So despite all this, the reward which is given to us by a respectable organization, which is an international organization, say that avoid bringing CA certificates. Now, why so? Because we are doing everything in good faith and we are trying to accommodate the client. So remember that two important maxims that you should always constantly bear in mind. Every day you must have these two things in your mind. What are those things? Work should not only be done, but it should be seen that it is done. You should be able to establish in black and white that this is the work I have done. And that is the importance of documentation. There are standards on auditing which are prescribing this documentation. They're prescribing. Therefore, the communication with the previous audit, it has to be in writing. You just cannot say, I rang him and he said, no problem, you go ahead. This is not the communication, friends. That other person is going to disclaim, he is going to deny that there was ever such communication. And ultimately, what is the rule? He should communicate in writing. This is the rule. It doesn't even talk of NOC. Remember, it never talks of NOC. In the Act, there is no such wording called NOC from the previous auditor. But you have to be careful. You have to, and now they are permitting, earlier the only mode, preferred mode was by registered post. But now they are permitting that it may be on the email. But which email? The email on the email ID which is registered on the institute's portal. So if you write on the email properly on that email ID and you ensure that the email has reached there, then your liability is over. But you have to wait for a reasonable time. You don't have to wait for their NOC as such. But writing is important. And it is a very clear direction in clause 8 of part 1 of first schedule that you should write, you should communicate in writing with the previous auditor. So what I'm saying is work should not only be done, but it should be seen that it is done. Friends, I have before my eyes, I presume that most of the people in the audience are average chartered accountants like me. I am also a very average and a mediocre chartered accountant. I am not a very coming from a very high-fi background or high-fi firm. So you and I basically are sailing in the same boat, but we lack in documentation. What we do is we do 80% of the work, perhaps 100% of the work, but we never document it. Whereas some big firms, what is their strategy? They might be doing hardly 20% of the work, but they document. They prepare huge heap of files to show that how much they have worked. This is the difference, friends. And therefore, work should not only be done, but it should be seen that it is done. So keep on writing, keep on documenting. Then the next maxim is also important. Faintest of ink is stronger than the strongest of memories. Great memories you may be having. You might have scored 100% marks in all your exam papers, but that is not enough, friends. Your brilliance has no value. Ultimately, what is the evidence that you had given this message to the others? So, faintest of ink is stronger than the strongest of memories. How that work was done, who were people deployed there, what was your audit program, what were the locations, all that has to be documented. And therefore, for these friends, my first request to you is that please invest maximum time on capacity building of the staff. We keep on blaming our staff, we keep on blaming our articles, saying that they are not very serious, they are concerned only with their exams and coaching classes. They don't, because we never train them in a manner which will create interest in their mind in the work. Remember, friends, very seriously that who is going to do the paperwork, who is going to do the documentation. Along with this PPT, I have also sent another PPT of mine, although that was not the exact paper today, the topic today, but just for the benefit of the audience, benefit of the members, I have sent it, working paper management. So working paper management, who is going to prepare the working papers? Ultimately, our staff, our articles, our trainees. How much are we spending time-wise and effort-wise and money-wise for their training? What we do is, as soon as any new article joins, we just send him on some audit. He doesn't know even where he is going, what kind of work he is doing. There is no such systematic audit permanent file maintained by us. We studied this. We studied in our exams. We studied right at the time of BCom also that there should be audit audit permanent file and then audit current file. But audit permanent file, for example, the client's constitution, like memorandum association or constitution or objects clause or articles of association or the trust deed, all these things we should have. The KYC is another guideline of the institute. We should have the KYC, we should know organization structure, we should know what is the business of that organization, what is the activity, what are the objects, so that any new person comes to know about the organization, what is the authority structure, who is authorized to do what. All that has to be recorded once for all in your file, and of course it is to be reviewed. So remember that you have to spend, and if at all one firm cannot afford it, let 4 or 5 firms combine and their staff and it should be done in the form of workshops, not on large seminars. People take pride, branches and study circles take pride that we organize a seminar where 1,000 students attended. That has no meaning, friends. Ultimately, the work has to be taught, training is to be given in the small groups of workshop, in the nature of workshops. Seminar, you will get a pat on your back that yes, large seminar you conducted, but it has no impact. The impact is with a close audience, with a close participation, that each and every aspect is properly explained. So this is a very important thing that one should take note of. Now, what is the image of we are not proactive. Why we cannot do the work properly and in time is that we are not proactive. See, there is a book by Stephen Covey, as you are aware, that 7 habits of the most influential people. And the first habit is proactive. They initiate the work. Influential people initiate the work. We are reactive. Client gives us something, then we start working. But we have lacking the courage. In fact, there is a crisis of courage in our profession. In fact, we are not able to put our foot down that this nonsense we cannot tolerate, because we have a fear that the client will go away. Therefore, if we start the work in time, and if we have the courage to tell the client that if he doesn't cooperate in this, then it has to be, then you will not do the work. That kind of a threat should be given and it should be actually followed. But for that, again, written communication is important. It is not enough saying that, and that is why I said faintest of ink is stronger than the strongest of memories. Means you might tell this to the client 10 times or 100 times, but that has no value. Write to him, and remember that chartered accountants are not taught to say no. In fact, I say at the last line in this slide, you will see lack of communication skills. We cannot say no to any client, and therefore we lose the respect because we are saying yes to everything. Now I will share with you third case, because on every your Asia Supteshu Jagrati means I have to keep you awake and your interest should be there in the presentation. So I'll share with you a very interesting case. It is not that all the facts are not mentioned here. You just listen to the story. See, there was a very reputed CA firm, more than 75-year-old firm, and all systems were in place. Now, this firm was handling the audit, a statutory and tax audit of a private limited company for last 25 years. And when there was some 4 or 5 days balance for the deadline of the income tax return, that private limited company had only 2 shareholders. We had 2 brothers of each other. Elder brother was holding 60%, he was the chairman, and younger brother was the director, was holding 40%. Now this younger brother came to the office of the chartered accountant and requests that if the hard copy of the balance sheet and financial statements is ready, let the chartered accountant sign it, and he will take it to his elder brother. He will obtain his signature also, and then the returns can be submitted. So in good faith, the chartered accountant put his signature and the younger brother took away the papers. Obviously, there was some friction between the two brothers. As I told you, disputes in a commercial relationship are bound to be there. Therefore, there was a dispute and he took the papers. He obtained the signature of the elder brother, but never put his own signature. He had that scheming mind that he wanted to harass the chartered accountant. So, the return was filed in good faith. Then he filed a complaint to the institute on 2 counts. What were the 2 counts? Very interesting, very eye-opening counts, and it is like a nightmare, friends. Ever since I have started attending the disciplinary cases on behalf of the chartered accountants, I have lost my sleep altogether. And remember, I only plead on behalf of the respondents and never on behalf of the complainant, because our profession is so fragile that anything can destroy it, anything can demolish it. That is the very hard reality of life, friends, because we are not working properly. If we work properly, an institute wants that we should work properly and flawlessly with proper documentation so that no other person can point a finger on us. So remember that in this particular case, he filed a complaint on 2 counts, that younger director. What were the 2 counts? Firstly, he said that under the Companies Act, the financial statements are required to be signed by 2 directors. Whereas in this particular case, there was only 1 director who had signed because he never put his own signature. So he said that was the situation, and still the auditor had signed. That means it was a violation of Companies Act and therefore it was a misconduct. Now at this juncture, I must take a pause, that people are under an impression that if 2 directors have signed, then they can jolly well put their signature and that will end the documentation, which is not so, friends. The company law provision says, the relevant section, this signature is the 3rd subsection, subsection 3. But the subsection 1 says that the account should be first approved in the board meeting. So what is most essential and of utmost importance is that the account should be approved in the board meeting. And friends, now I will share with you that we are doing so much for the client. Let me mention very frankly that we help him in finalizing the accounts. We help him in presentation of the accounts in the prescribed form, because there is no qualified person in the account, in the business client. And then we only help him in preparing the director's report, then the notes on account, and MRL also we help in preparing. But one small letter, which is for our own safety, that we don't obtain from him. What is that letter? Obtain a simple letter from each and every company that these accounts where our financial statements were approved in the board meeting held on such and such date. That is of utmost importance. Signature is secondary. Once it is approved, they authorize two of them to sign on the behalf of the board. This is important. So you must know that approval in the board is important, and therefore to a letter to that effect you must obtain, just as you obtain appointment letter, just as you obtain MRL. It is this letter that you should invariably obtain. So this is the most important compliance where we are lacking, and therefore there is no documentation. Because see, there could be 6 or 7 directors. There should be a proper resolution approving the accounts and authorizing 2 of them to sign or 3 of them to sign. So this fact you should bear in mind. The second ground of appeal or a ground of complaint was also very interesting, and again an eye-opener. Obviously, there was some friction between the two brothers. So the next complaint was that one of the cars of the company was registered in the name of only that elder director, and it was not registered in the name of the company. Now, people will argue with me that even if it is registered in the name of a director or a partner, still the company is entitled to depreciation under Income Tax Act. But friends, this is not enough. Under the Income Tax Act, the principle is that of beneficial ownership. Whereas in legality, in the Companies Act, when you are certifying that the assets of an entity, it is your primary duty to verify whether that asset stands in the name of the company. And therefore, friends, unfortunately, we never see, because we never train the people to do that, because we ourselves don't know. So that is why this training is required. Training of chartered accountants is also required in the context of these disciplinary cases, because they are also not very serious about the standards on auditing and the concepts of audit. And therefore, unless we learn it, there has to be workshop even for chartered accountants to explain the basic principles of auditing, and then only they will in turn train the articles. So remember that, and now you will ask me as to if such a long time relationship they had, and a reputed firm and a privately employed company's audit they are doing for 25 years, why did he file the complaint? And the reason is very funny, friends. The reason is that particular director had approached this CA firm with a request to accommodate his daughter as a dummy article, which the firm had refused. And just to have a vengeance, just to have the score over this firm and to harass them, the director had filed a complaint. Because the senior partners of that firm, they are highly principled people. They said that we have never accommodated even our own nephews and sons as a dummy article. Then where is the question of accommodating your daughter as a dummy article? That person was agitated, he was offended by this, and therefore he filed this complaint. So friends, you just can't trust any person. That is why I'm saying good faith. So good faith is the most dangerous thing, and therefore, friends, you have to be extremely careful that all things that you do should be documented. Anything and everything that is because work should not only be done, but it should be seen that it is done. Now, suggested reading, friends, actually there are 3 volumes now. Basic reading is you have to read the accounting standard and standards on auditing is a different story. But basically, as far as ethics are concerned, there are 3 volumes which are published by our institute. Volume 1 is basically something like philosophical, something like ideological, something like basic principles as to how an independent auditor should function. So these are based on the international standards of ethics. International Ethical Standard Board is there. So they have prescribed it as international standards, and our institute has adapted them for the Indian situation. So that is volume 1. Volume 2 is the one which is directly on day-to-day basis relevant to us, which is the CA Act, CA rules, regulations, guidelines, notifications, all other pronouncements of the institute. They are also binding on us, and those are tangibly we can see. See, in first part, volume 1, there are certain concepts like independence as a concept, how you ensure the independence. But then there are certain things which are left to the discretion of the auditors about the independence and about so many things. But here, there are very specific direct income like provisions like under income tax act and all. So therefore, volume 2 is of very, very direct relevance to us. So is volume 1 is also relevant, but volume 2 is familiar. We are familiar with volume 2. And the volume 3 contains the case laws. Unfortunately, friends, or rather it's a reality that each and every case is totally different from each other, and therefore the precedent as such hardly works. Precedent doesn't help much, and therefore even if there are case laws, now one case, very recent case I'll tell you, recent also, now it is more than 3 years old, 3 or 4 years, but still very important case, friends. There are certain High Court decisions that I will be sharing with you, apart from the disciplinary cases which I have myself handled. Now, what was that case? The issue before the High Court was whether a chartered accountant's conduct should be examined only if, and in the context of Code of Ethics, only if his presence or his action is in the course of his profession, or when he was present at that particular place because he is a chartered accountant. I'll give you a good example. Suppose a chartered accountant misbehaves with a female. Now, whether it is relevant that he has done it in his office or in another CA's office or in a CA conference or in a client's office, where his presence was there because he was a chartered accountant. Is this thing to be seen? Or wherever he goes, he is traveling on a holiday tour or he is attending a private function, and there if such thing happens, even there whether Code of Ethics governs him, whether Code of Ethics, whether you can catch hold of him. And High Court said yes. The institute also argued that yes, because the behavior of the chartered accountant should be exemplary behavior. Other people try to emulate the chartered accountants. So this behavior should be like Raja Harishchandra or Raja Ram, so that people get a message and it is absolutely above all the petty things. And therefore, and why so? There is a logic to it. Not that it is merely a philosophy, not that it is merely I'm not going to give you a pravachan or a sermon on this. Basically, it is a practical relevance. Because if you see, if any such thing happens, how the press reports it, how the social media reports it. The press reports it like this: chartered accountant held for bribery, chartered accountant held for masterminding the big scam, financial scam. So they project the word chartered accountant before the person who has done it. That spoils the image of the entire profession. And our council is very much concerned with the maintenance and upholding of the reputation and the credibility of the profession as such. Because otherwise, if the profession loses credibility, all of us will starve because there is no other work for us. So credibility is of utmost importance. And therefore, this decision says that yes, anywhere and everywhere you go, these ethics will always be applicable to you. And that is a correct decision. We should keep always that in mind, because whatever, it could be a simple traffic offense. But still, if at all it is a big hype is created and the chartered accountants are like the reporting in the press is like this, then it does harm all of us. Now, In good faith, friends, one chartered accountant signed the tax audit of another CA firm. A CA firm was very large firm, but they were all his friends. All the partners of that other firm were the very close friends of this proprietor CA. And therefore, he in good faith signed that balance sheet. But while doing so, it was revealed that the total collection of that firm was 5 crore rupees. But on one particular day, there was a cash negative balance which was exposed in the income tax scrutiny assessment. And the income tax department simply forwarded that to the institute's office to verify as to whether the chartered accountant had done the audit properly. Again, a matter of good faith, friends. We have done it in good faith because we trusted that the other chartered accountancy firm, who is such a big firm and who are all my friends, would be doing it responsibly. But then sometimes there is a casual approach. Sometimes there is something which is missing out. And now we have got all the technology, but it should occur to your mind that you should see these basic things. But we don't see the basic things. I don't say that there was a fault on his part, but these are, if there are standing instructions to our staff, that yes, these are the key factor that one should see, where at least the first elimination is there. So if so, friends, what is important is that we should always be very particular about the work that we are doing. So working papers are very important. I just see something has come on the screen. I just try to. Is the screen visible or there's something else has come that is also appearing on the screen? Hello? Hello? Hello?
Sir,
Actually,
yes.
something is appearing, sir.
Yes, sir, yes, sir.
Yeah,
I try to eliminate that. Somehow I'm not able to remove.
Sir,
Just see.
I think it is on your screen only, sir. Please click on
Yeah,
OK.
I'll try to remove it. Yeah. Anyway.
Okay, sir. Okay button.
Yeah. Now better?
No, sir. It is not.
Yeah, I'm setting it right, but without the screen, I'll be able to first tell you what exactly, because I'm not dependent on that particular thing.
Okay,
I just explain to you what, because I'm telling you the true stories and true case laws. So there is a case law which is, as I told you, that the Bombay High Court decision was there that chartered accountants are only watchdogs and not bloodhounds. But now the scenario is changing, the times are changing, and now people expect us to be bloodhounds. Small errors are now looked upon or are looked at as misconduct. There is a principle laid down by a Kolkata High Court decision that every error is not a misconduct. Even a blunder is not a misconduct. Even a negligence is not a misconduct. But what is contemplated in clause 7 of part 1 of second schedule is that it should be a gross negligence. Oh, gross negligence, and now they have added the word gross negligence or lack of due diligence. Now I'll explain to you by way of a case law as to what is the difference between gross negligence and lack of due diligence. But the High Court said that the gross negligence, there should be an element of dishonesty or ill motive. This is not there on the screen. I'm telling you the facts of the case. So basically, the court said that there should be an element of dishonesty or ill motive. Now, if you see that, then what is the element of dishonesty? Because then if you argue this way before the disciplinary committee, so the dishonesty means people will say that the disciplinary committee replied to this particular argument that, for example, if a good friend of yours comes to you, he's a very honest person, he's a good person, he's not a cheater, he doesn't do any hanky-panky in the accounts, but unfortunately he is not well versed with the accounts. So, for example, if he presents his balance sheet before you and asks you to sign, you don't have any ill motive. You don't have any, I would say, element of dishonesty, but you are signing it just to help him. The question is, although you don't realize that you have done something dishonest, because remember, friends, our signature means what? Our signature means we have signed it only after verification. It is the indicative of thing that I have signed. A chartered accountant has signed means without verification he will not sign. There is another clause in the schedules that if you are signing any financial statement without verification, that itself is a misconduct. Because the message to the world at large is that you are now putting your signature, and therefore, friends, we ourselves should recognize the value of our signature. You cannot say, he may say that I don't have any ill motive, I don't have, but the very fact that based on your balance sheet signed by you, somebody is going to trust the financial position of that friend. And the banker, for example, may give a loan based on that. Or the revenue authorities may assess that particular thing based on your signature. And therefore, friends, what you are supposed to do is नाही नाही further changing. So what is important, friends, is that your signature is denoting the fact that you are basically satisfied that the papers are correct, that you are satisfied that there are proper documentation and the financial statements really show a true and fair view. Next slide. So see, in that corporation, Satyam Corporation, what had happened was basically they had relied on the financial statement, in the sense fixed deposit receipt. And the argument of the auditor firm was that if such a reputed corporation, international corporation, having won the Golden Peacock Award for governance, and then if we cannot rely with good faith, that was also a case of good faith. If we cannot rely on the 10,000 crores of deposit of the company, then to what extent we can verify the things? To what extent? Because we must rely, because they are very reputed people. See, same situation which I just now explained, that the friend of yours is a good person, nice person, honest person, but still it is trust but verify. That is, again I'm saying, professional skepticism is trust but verify. So here also, then the reaction of the finance minister was that if for such a large deposit also, if we are not able to rely on the audited certificate, then why is audit required at all? I hope you are appreciating this point, that audit, once you are signing that, then signing means ultimately the fact that you have verified. And now I think I'll share with you 2 or 3 recent things that are happening. See, of late, there were such cases reported to me, they came for my reference. One was stock verification. Very large corporates with 4,000, 5,000 crore of rupees turnover. With turnover so high, and their stocks were also 400 or 500 crore rupees. Suppose that they might be having their head office in Ahmedabad, but they catch hold of some small chartered accountant situated somewhere in Mumbai, and they expect him to certify the stocks and within a span of 3 or 4 days time. And they offer him 30,000-40,000 rupees fees. Remember, friends, as far as possible, try to avoid urgent work. The professional skepticism means as to why such a large corporates who are having so many professionally qualified people in-house and who are also, their auditors are very big firms, reputed firms, why are they approaching a small CA like me for the certification? But unfortunately, in the temptation of that 30,000-40,000 rupees, that chartered accountant certifies the stocks. Certifies the stocks. And there are no working papers at all. Because he has certified it within just 3 or 4 days. There is no working paper. There is no, sometimes not even appointment letter. And they just say that means who were your assistants, what are the number of people in your staff, where were the locations of those test stock. People people believe that such a reputed corporation must be having everything all right. But unfortunately, whenever such organizations go beyond proportion, there's bound to be something fishy in the organization. So that is professional skepticism. See, suppose I happen to be a director of a small scheduled cooperative bank. When any large borrower comes, our first reaction is as to why he is coming to us. Why he cannot go to large banks for finance? Because probably there is something wrong, something fishy in the balance sheet, and that is why he is coming to us. Now, there are two schedules on the screen. What is the definition of misconduct? The definition of misconduct under Section C, Chapter 5 of the Chartered Accountants Act describes all the disciplinary procedure and the mechanism. Section 21 starts with the basically misconduct proceedings or how it should be dealt with. Section 22 defines the misconduct as any item stipulated in first or second schedule, which are there. I'm just mentioning these are the what is the basically content of that schedule, then we will go clause by clause later on. Any item, there are 34 items, in 19 items in first schedule, 15 items in the second schedule. And there are 4 parts of the first schedule, 3 parts of the second schedule. What is the significance of this? So this is one, any item stipulated in schedule 1 or 2 and any other misconduct. That other misconduct means bringing disrepute to the profession. That means a behavior which is unbecoming of a chartered accountant, unbecoming of a professional. Even in this case, there are even dowry cases also. So socially also, your chartered accountant behavior should be socially acceptable behavior. So this is first thing. Now, what is the difference between Schedule 1 and Schedule 2? Schedule 1 offenses are those which are affecting only other professional brothers, which is within the profession. An outsider is not aggrieved. An outsider is not adversely affected. For example, communication with the previous auditor is basically stated in Schedule 1. Or like if you, by verifying your own appointment, whether it has been validly done. Unfortunately, chartered accountants are very much lacking in verifying the secretarial record. They don't see the minutes. They don't see whether the meetings are properly held and whether the decisions are properly taken. All that we don't verify only. And that is the first and foremost duty of the chartered accountant, to verify whether his own appointment is validly done. Or doing a business without the permission of the institute. Outsider is not affected. Or soliciting the client or advertising. Here outsider is not affected. And therefore these are Schedule 1 offenses which are considered to be of a little lesser gravity, lesser intensity. But Schedule 2 offenses are those which are basically affecting the outsiders adversely. For example, your gross negligence. You are not signing the balance sheets properly. Therefore, financial institutions are lending to that company and the money is lost because of it is become NPA. So this is Schedule 2. Or you are certifying, under there is a conflict of interest and you are certifying the financial statements of your own relative. Or if you are not keeping the client's money in a separate bank account and you are mixing up that money in your own affairs. So this is also where outsiders' money is affected and or outsiders' interests are affected, and therefore it is Schedule 2 and which are considered to be of greater gravity or intensity. Next slide. Now, basically these provisions say that, okay. Uh-huh. Okay. So now, I'll broadly now describe what is the disciplinary procedure, or rather basic provisions relating to the disciplinary mechanism. But before that, I must also share with you another interesting case that I was describing to you what is difference between gross negligence and lack of due diligence, because now they have added this word lack of due diligence. Basically, there was a large company with about 600 crores turnover, and they had some mines in Orissa, and they had taken a term loan for machinery from a PSU bank. Now, if they have taken that loan, remember that if at all the unit becomes NPA, then if wherever there is a lending by large banks, immediately they catch hold of the auditor. They make the auditor as the scapegoat because he is the soft target. And they claim that they lent to that company because they relied on the financial statement signed by the auditor. Basically, it is likely that there was a collusion between the company and the bank manager. But when such problems arise, the scapegoat is the chartered accountant. And therefore, unfortunately, the complaint was there against the chartered accountant. Now, this particular firm, they came to me and they showed that they had maintained excellent working papers. It was a learning for me also. So therefore, I complimented them that yes, you have maintained the working papers very nicely. So we sent the working papers to the institute against the complaint, in response to the complaint. Then afterwards, after about 1.5 years time, those chartered accountants came to me again and said that the institute has now asked for only 2 details. What were the 2 details? One is whether you had confirmed independently by writing to the bank about the balances and about the transactions. They said we did not write to the bank, but we are holding the papers or the photocopies of all the bank statements with us. So I said, very good, we will send that way. And then second question was whether you had written independently to the debtors and creditors for confirmation of balances. There they said that no, they had not written. But then they confided with me, friends. They said that it was a CBI matter. They were grilled by the CBI authorities because it was so revealed that hardly any paper which was produced before them as evidence for audit was genuine paper. Everything was fabricated, including bank statements. Out of 10 bank statements, maybe 8 were fabricated. And therefore, in so far as they had obtained these bank statements, you cannot say that they are grossly negligent because they have followed the audit procedures. But they did not verify. This is the importance of third-party evidence. In fact, there are many frauds that are occurring just because we are not taking care of the third-party evidence. And therefore, it is always believed that audit never has exposed any fraud because we don't take any steps for the third-party evidence. Recently, so this is lack of due diligence. Had they returned to the bank, probably a big ghotala would have been exposed much earlier. Recently, there was a trust, medical trust, which was promoted by 3 reputed hospitals in Mumbai. And that trust was helping the poor patients. The internal auditors was a good firm. They are all nice people. I know them very well personally also. And they were doing the internal audit very sincerely for last 20 years, ever since the inception of that trust. Similarly, there was a senior CA firm which was doing the statutory audit for last 20 years. And it was all smoothly going on. But unfortunately, there was one sub-staff in that hospital. His son was doing BCom, and these chartered accountants, they tried to train him up because he was quite intelligent. So they helped him how to write accounts and everything. So they wanted to help him to build up his career. So they trained him, they educated him. He had another friend. So both the boys actually joined that particular trust as accountant and clerk. But later on, after, say, they were working there for 15 to 18 years now. But last 7 or 8 years, they started committing fraud. And they have siphoned off about 6 crores rupees from the trust by creating fake entities in their names outside and by diverting the funds of the trust. Remember that in the charitable trust and the third party evidence, again, good faith, friends. I'm repeatedly saying that you are doing things in good faith. Never have any good faith, anyone, you are not even in your spouse. Forget about friend and other thing. Most common frauds which are appearing in the chartered accountant, as I mentioned to you that we are lacking in verifying the stocks. We don't have any sense of quantitative details. We don't have any sense of the secretarial work. Another thing where we are lacking is that we never verify the original fixed deposit receipts. We just go by accounts. But there are at least 6 cases which I have handled where the trusted employee of that organization, what they fraudulently obtained, because all these, the governing body consisted of very large very reputed doctors, very highly reputed surgeons, and very busy people. So they used to obtain their signatures in a hurry on the fixed deposit receipts for encashment and also on the checks. And in good faith, they were signing. And what was happening was the staff was encashing the fixed deposits and exact amount they were transferring to their own account, and they used to mask those entries in the bank statement and they used to take photocopies. Now you should always suspect as to why photocopies of these bank statements are there, why there is a masking of some entries, because there was the exact contra entry and therefore the balances were tallying. So please take care that merely the confirmation of final balance is not enough. You have to see each and every bank statement and see the reconciliation, and also see fixed deposit receipts. In Satyam case, same thing happened, no? The fixed deposit receipt was not, there were other mistakes also, but this was one of the major ones. So also remember, in any organization, especially charitable organizations, it is your duty to verify the original investment document. If you don't see it, you take it from me that there will be something gadbad or some fishy thing will be there in your that balance. Here in these boys who had committed the fraud, it was reported in the press also, 6 crore rupees siphoned off like this. Very sad state of affairs, friends. But yes, unfortunately, it is happening like that. Now, I am dealing with the disciplinary mechanism. So disciplinary mechanism means the basic provisions. See, there are 4 authorities under the Act. Under the Chartered Accountants Act, Code of Ethics means it is a disciplinary mechanism, because that is also a part of the topic which has been allotted to me today. So about this, I must also share with you the recent happening in the field of disciplinary mechanism. A very large reputed NBFC engaged in housing finances. And there is a scam, there is a fraud of 31,000 crore rupees. And in that, the statutory auditors are also a very reputed firm. And there were many branches, about 200 branches, and there were about 30 branch auditors appointed. But in the annual general meeting, the statutory auditor was appointed, and the company writes to the branch auditors that in consultation with the statutory auditors, you are hereby appointed as the branch auditor. And there are terms and conditions which are stated in the appointment letter. So the appointment is by the company, but it is not there in the AGM. And the branch auditors are addressing the report to the statutory auditor, but the fees are paid by the company again. So all these things, last 15 years this was going on. But this year NFRA has issued a notice to all the branch auditors. Apart from the statutory auditors, they have issued a notice to all the branch auditors, saying that your appointment itself is not valid because it is not done in the AGM. I mentioned to you a short while ago that your own appointment you have to verify. For example, if you are appointed in the place of another auditor, merely a director's letter is not sufficient. You have to verify whether all the company law formalities has been done. Merely NOC, merely obtaining the NOC is not sufficient. You have to see whether the meeting was held, whether the notices were issued, whether there were attendance recorded, whether the minutes are signed by the directors and the chairman, whether the minutes are uploaded. All that you have to see. And people, unfortunately, do not take care of the secretarial compliance. So in this case, what happened was, in that large corporate, they were all there could be at least 20, 25 chartered accountants. There could be company secretaries, lawyers, even a company secretarial audit was there. Nobody had noticed this lacuna earlier. And now they are saying that your appointment itself is not valid. So in this large organization like this, if this could happen, in a small organization, so many blunders will be taking place. So please take care of that. Second was another thing, which is the standard on auditing, which we are not following. As soon as we receive the appointment letter, the standard on auditing, SA 210, I think, it says that you should issue an engagement letter. That engagement letter we never write to the client. In fact, even the appointment letter also, earlier we were never receiving, only because now it is to be uploaded to the ROC site. We are now insisting on the appointment letter. Now, otherwise there was a time when chartered accountants did not care even about obtaining the appointment letter from any company or organization. So there has to be an appointment letter which we need to upload, and there has to be an engagement letter. What is that engagement letter? That we have to reply to them that you are going to carry out the audit in such a manner. How much staff will be deployed, how long it will take, what is the responsibility of the management, what is the responsibility of the auditor, all that is stated in the engagement letter. Unfortunately, in small and medium-sized firms, engagement letters are never issued, but it is standard on auditing. And non-compliance with the standard on auditing is a misconduct. Now, therefore, our institute has made it mandatory that apart from code of ethics, there has to be also at least 2 hours lecture on the standard on auditing every year in every study circle. Because standard on auditing is the one which, and remember friends, all this is for our own protection. People feel that this code of ethics is a burden unnecessarily thrust on us. It is not so, friends. It is for our own protection. Otherwise, people will take advantage of your vulnerability. People will take advantage of the fact that you have not been careful about documentation, and therefore they say you are not valid auditor at all. Then what answer you will have? So remember that this is to protect us. We should be able to show that work should not only be done, but it should be seen that it is done. We have verified everything. That verification has to be recorded in your working paper, that yes, I have seen this. Who has seen this? That also should be recorded. And therefore, I said there should be an audit permanent file, where the appointment letter, where the communication with the previous auditor, everything should be there. So now we come back to the authorities under the Act. The first authority is disciplinary directorate. Director discipline is the head of that particular division. There are many chartered accountants and lawyers who are employed. They are basically bureaucrats. They are sort of government servants only. The complaint is basically received at the disciplinary directorate stage. It doesn't go directly to the council or to the disciplinary committee. This disciplinary directorate, what is their role, how they function, I will come a little later. Then board of discipline is the one which is supposed to look after the first schedule offenses. Now here also I must make it clear that there is a change, and unfortunately chartered accountants are not very much aware as to what things are happening there and how the government is gradually taking over all the powers perhaps in this regard from the institute. See, earlier board of discipline consisted of 3 members, 2 of which were our central council members and 1 was a government nominee. Now they are in the amendment, they have changed it, made it other way around. That means 2 government nominees and 1 central council member. And the presiding officer of that, the president of that BOD, earlier was a central council member, now it will be government nominee. So you can imagine that now government is taking over the entire function indirectly. Therefore, you will have very tough time, friends. So times are changing. Many people are wondering, yeah, 30 years ke mere practice mein nothing happened. I have an unblemished career. Don't be under that wrong impression. Just because you are lucky, you were not exposed. Otherwise, every day you are committing some misconduct or the other. Disciplinary committee, there were 5 members. Earlier, there were 3 central council members and 2 government nominees. But now again, they have changed it. 3 government nominees, but the president will be the government nominee and 2 central council members. So again, and it deals with the second schedule offences. Then next authority is the appellate authority. Now, how the case travels from the director discipline to the appellate authority, that we will discuss now. So, all these important pronouncements of the act that you have to be careful. The disciplinary mechanism, the authorities. Now, authority, just now I mentioned in my PPT, also perhaps it has remained to be updated, I am not very sure. But this is the amendment which has been done, but the central government has to notify it the date of its enforcement or applicability. So, there are certain important principles. Before I go to the procedures, let me deal with the important principles of the disciplinary mechanism. First and foremost is that a disciplinary complaint or disciplinary case is commenced either on the basis of some complaint or on information. What is the difference between complaint and information? Complaint means there is a prescribed form, there is a fee of 2,500 rupees. So complainant has to file that in the prescribed form, in the prescribed manner by paying a fee. This is a complaint. What is information? Information means you have come across some irregularity of a chartered accountant. Usually the regulators like Registrar of Companies, other revenue authorities, SEBI, bankers, sometimes they file what is called as an information. The difference between complaint and information is that if it is an information, the director discipline writes to that informant, the person who is informing them, whether they want to file a complaint or they want to remain only as an informant. The difference is that if it is only an information case, then they are not there in the picture later on. Only the institute writes to them that we will only inform you the results. But otherwise, you are not in the picture. Unlike in a complaint case, throughout the proceeding, the complainant is there in the picture. So this is the basic difference. Now, so complaint and this. Then the next principle is that although there is suo motu provision is there, but suo motu provision in the sense that it doesn't directly take up the case, institute direct doesn't take, they basically verify as to what is the substance in that and then take up the case. The next principle, the complainant need not come with clean hands. So for example, if what happens is that if many times the complaints are received, the reaction of the chartered accountant is that this complainant himself is a bad person. Complainant himself is a criminal person or a badmash person, and he counterattacks the complainant. The council says that we are not concerned with the behavior of the complainant. He could be a confirmed criminal. He may be even behind bars. He may be in the jail when he files a complaint. Even then, council says we are not concerned with that. We are concerned with your behavior only. We are concerned with you show that you have done the work properly. Whether he is a good person or bad person, we are least bothered. Because now basically we have got the information and he is saying that you have not done the work properly. Whether he is of good character or not, it does not matter to us, because we want to uphold the position. We have to uphold the credibility and the reputation of the profession. So you show that you have done the job correctly. Remember, this is the basic fundamental principle. Otherwise, if the council starts inquiring about the conduct of the complainant, there is no end to it. The council will not be able to complete even one case, because even the courts also, the cases continue for 20 years, 30 years. How long? So council does not have any jurisdiction over the outsiders. Council has jurisdiction only on the individual member. So complainant's character is immaterial. Remember, this is another principle. Secondly, the complainant may not have any locus standi also. So complainant may not have any locus standi in the sense he is not connected with the complaint at all. He might not be a shareholder or a director or a lender or a supplier or a vendor or customer or the regulator or banker, he may not have any relation or connection whatsoever with the company, and still he can file a complaint. So the locus standi of the complainant is immaterial. So this is another important principle that you need to bear in mind. So locus standi means a totally stranger can also file a complaint. And this is very dangerous, friends. In fact, there are professional blackmailers also. Unfortunately, they just randomly select some financial statements and try to harass that chartered accountant and even blackmail him. So in my last 25 years of this career, two such blackmailers were exposed. Then thirdly, complaint cannot be withdrawn. Earlier, under the old act, there was similar rule, complaint cannot be withdrawn. But in the 2006, there was major amendment, so they permitted that a complaint can be withdrawn with the permission of the president or the disciplinary committee or board of discipline. But again now, again 1 or 2 months back, again it is being amended, and now complaint cannot be withdrawn. So this is very important principle. So once the complaint is filed, you have to take it to the logical end. Only one amendment they have made now is that if at all the director discipline feels that it is a very frivolous, very trivial complaint, then at the threshold itself he can refuse to entertain that complaint. This provision was not there earlier. So now they have introduced this provision, which is a welcome provision. In the amendment it is there. Otherwise, a complaint once filed, once it is accepted by them, then it cannot be withdrawn. Secondly, the principle of this is that, as I told you, the council has jurisdiction only on the individual member and not on the you can say the complainant or the firm as such. There is no proceeding that the council can take against the firm. But now, as far as punishment is concerned, now there is an amendment there. They say that in the normal course, they have no jurisdiction on the firm. But if at all one partner is held guilty in a firm, and within next 5 years, another partner may be held guilty for some other misconduct, then the council feels or the disciplinary committee feels that in your one firm, there are two partners being held guilty in a short span of 5 years. So they have the power now to punish the firm also, which is very important thing that you should bear in mind. Otherwise, earlier, council or the disciplinary committee could not punish the firm as such. They could punish only the individual member. But NAFRA, on the other hand, they have the jurisdiction over the firm also. But institute, the council, does not have. Now, our chartered accountants are basically concerned with time barring as to how long you are answerable, how long you have to preserve the records. So there is a clause says that normally the complaint should be filed within 7 years from the date of the occurrence of the event which is complained against. For example, date of signing of the balance sheet is the true event against which you are filing a complaint. It is not the 31st March of the year, but the date of signing, because your misconduct has occurred on that date. But remember that this 7 years restriction is not a blanket one. It is not a very rigid one, unlike in the income tax. It says there is a rider to it. It says that the director discipline should be satisfied that production of evidence is now difficult or impossible, or it is otherwise difficult or impossible to take the proceedings to the end. And in those circumstances, probably he may refuse to entertain the complaint after a span of 7 years. Now, I will share with you a very interesting case or 2 or 3 interesting cases where if the misconduct alleged is absolutely self-evident, it is very patently appearing in the records, there is no other evidence required, then obviously they can entertain it even after 7 years. A very interesting illustration I can give you. There was a lady who prepared a will. She died after 10 to 12 years after preparing the will. When the will was opened, it was seen that the chartered accountant had signed as a witness, whereas that lady had not signed at all. This is a very serious thing, friends. People will say, "Kya hua usme? What is serious about it?" Remember, it is a false statement, because what is the meaning of witness? Witness means you are saying that that other person has signed in your presence, and then you have signed. Remember that when you are signing as a balance sheet, you are not signing as a witness, but you are signing as an auditor. So there the situation is different. Director may not sign in your presence, but auditor, when you are signing as a witness, then it is a false statement. It's a false message goes to the world that chartered accountant has made a statement that he has signed after that particular person has signed, which is false. And therefore it is a very serious misconduct. And then it is self-evident, because now on the paper it is very clear that you have signed and the testator had not signed. Obviously, this 7 years period will not help him. Sometimes your balance sheet itself is so obviously incorrect. You have not followed the accounting standards, you have not followed the standards on auditing, even sometimes even the balance sheet not telling. Then it is obvious, it is self-evident. Somebody had signed some document, he was holding the power of attorney from his wife, and he was signing as on her behalf, and he just mentioned there as proprietor, but he did not mention as for proprietor. So in that document, it was so obvious that he was doing some business without obtaining the permission of the institute. So the matter went to the institute. So these are the things which you should bear in mind. The next principle is that even if respondent compensates the complainant, for example, if because of your wrong advice, the complainant suffers, the taxpayer suffers in terms of higher tax, interest, penalties, etc., and the respondent goes to him and compensates him for everything, that cannot undo what you have already done. That means your misconduct still continues, it still remains. You cannot wipe it off. So this is another principle, that merely because you compensate the complainant, it doesn't help you. Next is, it is not even necessary that somebody is aggrieved by, somebody is suffering by because of your misconduct. This is very, very important principle, friends. Very important. I'll give you two illustrations of this. Suppose you have signed a balance sheet and the banker has financed that particular company or the entity. Now, the loan was serviced properly. There is no default. The loan was closed also. But still, if the banker notices that there is some default or some discrepancy in the financial statements, he can still file a complaint. You cannot argue that bank का कोई नुकसान नहीं हुआ है, bank has not suffered at all. This you cannot argue, because what institute says, what council says, what disciplinary committee says is that your job should be perfect. We are not concerned whether anybody suffers or not. This is very important principle, friends. Another illustration I'll give you of this. If there is a charitable institution which is 100% exempted from tax. Now, if it is 100% exempted, if you have signed a wrong balance sheet, a financial statement which is incorrect, and if the income tax officer notices it, then whether or not that particular thing has affected the revenue or not is immaterial. He can file a complaint or he can pass it on as an information. I'll give you another 2-3 instances of this, but let me complete this principle, then I'll come to the broad procedure. So, what is important is your work should be absolutely perfect in all respects by itself. It's not a relative term. You cannot say that qua the banker my work has nothing, means there was no flaw in that because the client has repaid the loan. Or qua income tax department my balance sheet was correct in the sense that they did not suffer. This argument is not accepted. This argument is not entertained at all. So anybody suffers or not is immaterial. And therefore, there is, and again, earlier there was no time barring for the disposal of the, now they have introduced mildly that the disposal of the complaint should be faster. But from where to where, you cannot even imagine that you can go up to the that in this particular thing can lead to a complaint against you, because the relationships change, the context changes, the situation changes. The person who was your friend earlier might become your enemy. I'll give you a very interesting illustration of interesting case. Mr. A was a chartered accountant, Mr. B was an engineer, and they were very close friends of each other. And they were doing a business of manufacturing in a private limited company, and both were doing it, and the business was very prosperous. They were doing that business for last 25 years. Now, B, who was an engineer, his son wanted to do his CA. So Mr. A, who was a CA, he had maintained his COP just for the sake of sentimental reasons, but he was actually not effectively practicing. B's son signed his articles under Mr. A. He passed his CA. He joined some corporate. The business of A and B was continued. After about 5 or 6 years, there was a dispute between A and B, and all complaints were filed in the criminal court, in the civil court, in the CLB, in the arbitration. Everywhere the complaints were filed, in the income tax department. And to add fuel to the fire, B's son, who had done articles under A, filed a complaint to the institute saying that my ex-boss, under whom I did my articles, he had not obtained the permission of the institute for acting as an executive director of the company. That is a default under clause 11 of part 1 of first schedule. So you have to obtain permission. There are many chartered accountants friends who are forming a private limited company just with their spouses. So there are only 2 directors. But what is permitted under the act is you can remain only a director simpliciter. You cannot be an active director. You cannot be an executive director. You can only attend board meetings. You can even subscribe the memorandum and be a promoter. You can be a director, but you have not to take any actual effective step in the execution of the business. For example, you cannot sign any document like any contract or invoices or checks, bank account operations, correspondence, that you are not supposed to do. Even the financial statements also for uploading, you are expected not to sign them, because this all amounts to, and now there are new guidelines on this. So please take care that if you are only 2 directors, you and your spouse, at least introduce a 3rd director for signatures of all this. Otherwise, you will be in great soup. And from where the complaint goes to the institute, you simply cannot imagine. You cannot even dream कि ऐसा कुछ होगा. So therefore, I am cautioning you friends that please understand the code of ethics strictly, very sincerely, so that at least you can avoid. Prevention is better than cure, friends. Prevention is better than cure. So therefore, always be careful that it is the more you avoid it, the better. Otherwise, once the complaint is filed, it takes at least 3 years for its disposal. And there will be a lot of mental agony and botheration to you. So we'll go to the procedure, disciplinary mechanism. So the complaint is to be filed in form number I. Then it's a simple form. You have to describe what is the nature of complaint. Then there's a filing fee of 2,500 rupees. Then the complaint that once the complaint is received by the disciplinary directorate. Now the new change is that if it is very frivolous, then they can even reject it at the threshold. But unless you are so lucky, otherwise these things very, very rarely happen. So that complaint is forwarded to the respondent. That means against whom the complaint is filed. And he is asked to give the explanation. So the explanation is that it is called written statement, which is to be given within 21 days time. Now, at the most, they can extend it by 30 days. Now they are curtailing that also to 21 days. So extension is given only for 21 days time. So 21 days time extension is given. That written statement, see, drafting also, we need to train the people for drafting. People are not able to write. Chartered accountants are not able to write anything, unfortunately. How the report should be drafted, how your reply should be drafted. Remember that if there is a complaint against you, you should not counter attack the complainant. You should not try to say that the complainant is a bad person. You objective manner, this is the complaint, this is my explanation. First write that. You may mention that complainant is a bad person, but that should not be the main substance of your written statement. Your main substance should be you explain how you have worked, how you have done the job. That is in the objective manner, you have to first present it. And then you may mention that the motive behind the complaint is very bad. Motive is to harass me, motive is to get something, some other benefit from my client or some such thing. But basically, your drafting should be very objective manner. So this is the first thing. Return statement is to be sent within 21 days or within the extended time of 21. And now it is 30 days, but now it is going to be reduced to 21 days. So extension will be also 21 days. Once the institute receives the response, now first step that the institute takes or the disciplinary director takes is that if at all the complaint is against a firm, then they first write to the firm as to who is the partner or who is the person answerable on this complaint. For example, in a big firm, the signing will be one partner, but the work might have been done by another junior partner. There could be a director, there could be a manager, all may be qualified. There could be thousands of qualified persons in a big firm. So all the team, now if you say, because there the work, the documentation is so perfect that they know each aspect was done by whom. In our small firm, we don't know what was done by whom. We don't even remember as to who had gone for the audit because we don't have any records. In fact, the standards on auditing also states, and we are all ignorant about it. Although it is there in the exam also, students don't read it. If any audit comes, each member of the audit team has to give a declaration that he is not related with that party. There is no conflict of interest, because if it is there, then it is a misconduct. So remember, friends, that these things are also to be documented. Unfortunately, small firms are not even aware of this. I can understand that in practice it is difficult, but if you are at least aware, then at least for large companies audit you will do it. For small proprietors audit you may not do it. But remember, understand the spirit behind it. The spirit is that if any of your article who is their part of the audit team is related to that client's director or proprietor or partner, then it amounts to conflict of interest. So please take care of this. Is a standard on auditing, which is directly mandatory thing. So the respondent's written statement is sent to the complainant. Complainant then has a right to send a rejoinder. Rejoinder means what is his reaction to the explanation given by the respondent. So he says that no, this is false statement, this is false explanation, this is not an acceptable explanation, whatever. He may counter, he may give some facts which are not stated properly by the respondent. So this is called a rejoinder. That means there are 3 documents now before the director discipline. One is complaint, then the written statement and the rejoinder. Once these 3 documents come, then the director discipline scrutinizes them. Director discipline means their assistant. It may be allotted to one particular assistant director or to some assistant junior person. Now he scrutinizes it. And if at all he finds that there should be some additional information required, then they write to that respective party, either the complainant or the respondent or both, for giving some additional information. Normally, what kind of additional information is asked? Some financial statements or working papers. See, normally working papers are missing in our small firms. So working papers is of utmost importance and they ask for your working papers. So also there are internal workings. For example, you are auditing a society or a cooperative bank or cooperative credit society, then you have to give the classification as to what is the rank, what is the grade you are giving, what is the class you are giving. For that is an objective examination or objective marking system. All that they ask for. The working papers, what kind of work was done, what was the audit program, whether all aspects were seen, who were the persons in the team, then what were your queries, how the queries were solved, all those are stated, and whether All the accounting standards you have followed. Where is your note that you have followed this accounting standard? All that has to be there. Unfortunately, audit is the function we are taking so lightly, friends, all small and medium firms, that they just at the end, they just sign something. It's because there is a pressure. Sometimes the articles are also filing a complaint saying that हम इतना काम करके we are sincerely taking out queries and our boss doesn't care about it and he simply signs. So these are also sometimes complaints that can come. So please give importance to what your assistant has done. Train the assistant. In fact, unless you train the assistant, because he also should develop interest in the work. Otherwise, what he feels is that audit is nothing but vouching. You have to explain to him what are the clauses. Remember, one should always read the audit report the format. There it says, we have obtained. Obtained means there is a positive act of getting it by efforts. We have obtained the information and explanation which was necessary for the audit. Many of our assistants, what they tell us, nobody told us, no, that client did not inform us this. Remember, it is your duty to ask, not the client's duty to tell. Client may not be even aware what is required. It is your duty to ask. And therefore, that asking should be recorded. Your query should be sent on mail so that there is an evidence that yes, I have asked him and he has not given or he has given some misleading facts. So remember, it is your duty to ask. That should be borne in mind and that should be trained. That habit should be inculcated among your staff. But chartered accountant himself is not very serious about it. Therefore, all these things do not happen. So, additional information. What kind of additional information? First is working paper. Secondly, if at all any document is in a regional language, say like Marathi or in your Hyderabad, whatever is the language, local language, then all the documents, sometimes these people, the lower authorities under land survey and all, they give the certification in the local language. So that needs to be translated. So the translation, so Telugu or Karnataka, whatever is the language, first English translation has to be given. Secondly, if at all the complaint is based on some local state law, for example, Maharashtra Cooperative Societies Act or Public Trust Act, Maharashtra Public Trust Act, Gujarat Public Trust Act, then the provisions of that act are also asked for. So this is another common information which is asked for. Similarly, if you are relying on some government circular or government's notification on some other law, that also they can ask for. So this is basically additional information. So now again to recapitulate: complaint, response, that is written statement, rejoinder, additional information. Once they get all these, then the director discipline forms what is called as prima facie opinion. Prima facie opinion means he may say that you are not guilty at all prima facie. Or he may say that out of 7 allegations, in 4 you are not, in 5 you are not prima facie guilty, in 2 only you are prima facie guilty. Once he forms this prima facie opinion, it's a very detailed opinion that has to be presented to the board of discipline or the disciplinary committee, depending on under which schedule the complaint is filed. Board of discipline or disciplinary committee may agree with the director or disagree with the director or only partly agree. For example, if the director discipline feels that the person is not prima facie guilty, there are only 1 or 2 allegations and he is not prima facie guilty, the board of discipline or disciplinary committee may say no, he is prima facie guilty. So they are disagreeing with but under suppose out of 7, so the disciplinary committee may say that he is not guilty in 5, but only in 4 he is not guilty, but 3 he is guilty. So this kind of thing is there. So that is their internal working, which is made known to you. Sometimes it so happens that although on the face of it you are not guilty, still the disciplinary committee may direct that still we will inquire. So this is also possible. So the full discretion and authority is given to the disciplinary committee or the board of discipline. Once you are held prima facie guilty, then that is the stage where your proceedings have started. And remember, when I come to the consequences of the punishment or this, that time I will deal with it. But basically, when you are making any empanelment, or you are writing now under the Companies Act section 139 requires that you should inform the directors at the time of appointment whether there are any proceedings of disciplinary committee against any of our partner. This is the point of time where disciplinary proceedings have commenced. Till that time, it is just a preliminary inquiry. But once you are held prima facie guilty, then the proceedings are on. And therefore, that way you have to write. Once the proceedings are there, then probably the government authorities like RBI or CNAG, they may take cognizance of this perhaps while allotting the audits to you. But even the private company where you are making a declaration under section 139, they may also decide that since there is a complaint against you, we are not comfortable with your firm as our auditor. So these are the things now this is a consequence now. So once you are held prima facie guilty, then the hearing takes place. The hearing takes place before either the Board of Discipline or the Disciplinary Committee. But if the offences are under both the schedules common, then it is the Disciplinary Committee. Then the Board of Discipline, there is no role to play. Once the hearing is a fact-finding process. So there is nothing to be afraid about it, but it's a fact. You have to produce the document, just as we have in the income tax assessment, or you have to produce the document and prove your case. You can be represented by a counsel. Similarly, complainant can be represented by a counsel. But if it is an information case, then informant has no role to play. As I told you, then he is out of the picture. The person who has given the information. I'll explain to you how information cases take place. But let me first complete this. Then the disciplinary committee issues what is called as a finding or a report. So there they discuss everything, that what was the defense taken by you, what was the complaint, and what is their final conclusion. So finally they will say that you were prima facie guilty in 3 matters, but now we hold that you are prima facie guilty only in 2, and in 1 you are relieving you. Anything can happen. Once you are found guilty even on 1 count, then another opportunity is given to you as to what punishment should be awarded to you. In that proceeding, you have to go alone. You cannot be accompanied by any counsel or anything. So there they give you punishment, which is by passing what is called an order. So 3 documents are issued by the disciplinary committee. What are those 3 documents? One is prima facie opinion, disciplinary directorate issues. Then the report or the finding of the committee. And third is order. Once the order is passed, then it is appealable. In between stage, there is no appeal. So after the order is passed, within 90 days, you get to file appeal to the appellate authority. And appellate authority, I told you, there are 5 members. It is presided over by a high court judge. So this is the broad mechanism of or procedural matter. Now remember that once what are the punishments that can be given? So that punishments also we will see definitely. Punishments have other, as I told you, for the first, that slide I'm locating, punishments. So, I'll tell you the punishments. The punishments are of 3 types. Under both the schedules, the punishment is of 3 types. Punishments of 3. First, if it is for the first schedule, as I told you, first schedule is of a lesser gravity. So the punishments are of 3 types. Firstly, it is only a reprimand. There could be combination of all 3. So reprimand means just a warning, just a stricture is given that please take care, henceforth you don't do. Normally, in the first occasion of not communicating with the previous auditor, so there normally a reprimand is given. But if you are repeatedly doing it, then there will be a severe punishment. Or if it is only technical default, otherwise it is and very minor or very trivial default, then they might only reprimand. But another thing is there could be a suspension for a period earlier, it was 3 months, maximum 3 months. Now it can be maximum 6 months. So this is the amendment which is recently done. So from 3 months, it is increased to 6 months. Earlier, the fine was only maximum up to 1 lakh. Now they are raising it to 2 lakhs. So basically, the punishments are becoming more severe. And another thing which they have introduced is that if there is a repeated guilt, repeatedly you are held any partner within 5 years time, if he is held guilty, another partner also, then the firm also is punished. So this is very important thing as far as punishments are concerned. Then for second schedule, similar punishments. First is reprimand. So although it is severe gravity, but still it is very technical in nature, and therefore it could be a reprimand. Very rarely in the second schedule there could be only reprimand. In practice, second schedule offense just left on reprimand is very rare. Second is suspension of membership even permanently for any length of time. It could be 3 months, it could be 3 years, it could be 13 years also. So for example, in that big corporate case, big firm, where the partners were debarred for forever, permanently, or that person, the chartered accountant who was involved in the bomb blast case of the 1993 Bombay bomb blast. So there that CA is also debarred permanently. So there could be seriousness depending on that the punishment is given. If you have committed some fraud, there also be suspension could be 3 years, 5 years also. So that is that. Then fine, which was earlier maximum 5 lakhs, which is now raised to 10 lakhs. Again, same thing has been introduced like first schedule, that if there are repetitive offenses, like within 5 years, some other proceedings are there, then also there could be a punishment which is very severe against the firm also. Now we will see indirect punishments, because direct punishments are there which are stated in the act, but indirect punishments are very severe. Simply just consider that if you are held guilty, then you cannot continue as a partner because your membership is suspended. Now, if you are not a practicing member, then you cannot be a partner. So this is the first loss that comes to you. If you are a proprietor, you are deprived of the audits of the banks and the government organization. So there is a big loss of revenue. So in large firms, I have seen that they have lost revenue to the tune of crores of rupees. If at all this, so there what they usually do is, once a partner is held prima facie guilty in their big firms, he immediately retires or withdraws from the firm, resigns from the firm, and sometimes there are management consultancy, private limited company, there is accommodated. So this is the usual method, but otherwise this is a great loss. In a small firm, this may not be possible for him to get accommodated somewhere else. Therefore, this indirect punishment is much, much more severe. Secondly, it is your eligibility now. For example, suppose you are suspended for three months. After 3 months, you can again restore your membership by making an application. But that time, your seniority is treated as 0. That means you are the first day of your practice. So you cannot train the articles. You cannot empanel also for large audits like government auditor, and also for section 139 of the Company Act, you cannot be, perhaps large corporates may not appoint you as auditor. So that is another big loss. And last is the stigma, because your name is published in the official gazette. People around you, your staff, your family members, they might fear he was held guilty by the institute. They are not bothered about what was the type of offense or anything, but it is a big stigma and you will feel ashamed to show your face everywhere. So this is very serious punishment. So one has to be very careful about it. Who complains? Anybody and everybody can complain. Your assistant, your partner, your spouse, your parent, your brother, sister, client, regulator, anybody can complain. Even the professional blackmailers are also there. That means totally a stranger also can complain. As I told you, instances where your own article has complained. So there is no end to this. Anybody can complain. Then we go to other exposures. See, before that, let me tell you how you cannot even dream that the complaint can go on this, because people are ill motivated. there is some dispute, remember that basically from any business group, only one or two persons interact with us. Only one person usually interacts because other persons are either not interested or they are not conversant with the accounts, finances, and other things. So, since it is not properly documented, there are no minutes, nothing. So, what happens is if there are disputes among them, then the other directors or other partners simply disown everything. They say this director had a collusion or a hand, he was acting hand in glove with the auditor, and auditor and that our director have made a gafla in our accounts. We are not aware of anything. They will say that the balance sheet was never shown to us. They will say that the meeting was never called. They will say that we never attended the meeting, there was no notice, and therefore we even don't know the accounts. So remember, this is my first practical tip to you. And every year, one hard copy of your balance sheet or financial statements, obtain signature of all the directors or all the partners or all the trustees, all the managing committee members, so that they will not be able to say that this was never shown to us. So this is a practice for your own safety I am suggesting to you. Otherwise, when there are disputes, people are simply alleging anything against the auditor and against their own person also. So remember that this is a practical thing that you should always keep in mind. Then other exposures means basically people are now so over enthusiastic that they directly approach the police. In fact, one lady had some dispute with the chartered accountant. Earlier, that chartered accountant had helped her a lot. But she was from a criminal background, basically, which the chartered accountant was not aware. Poor fellow. So what she did, that she was sitting in his cabin and he went outside the cabin, and from his mobile, she sent very dirty messages to herself. And then she went to the police. The police arrested him. He was there behind bars for 5 days and now he's on bail. So these things can happen. And she also sent that photo of the screenshot to the institute, bringing disrepute to the profession. So remember that there are KYC norms which are prescribed. It is not that in the KYC norm you will come to know all this, but still at least some cushion is there. So this is police. Secondly, they go to the press. And in the press, your all badnami, defamation is done. That is another thing. Secondly, largely they can go even to the consumer court. Because suppose you have given a wrong advice, then they can approach the consumer forum that because of his wrong advice, I had to pay heavy tax. So all these exposures are there. Now, friends, peer review is one of the measures to prevent these things. But unfortunately, we don't take peer review also that seriously. Peer review should be, actually, it's a healthy practice that even within your firm, other persons should examine your work. Even your friends are there, like all CAs. We can examine each other's work, and so that all of us improve. Unfortunately, we are not paying any attention to the training of the staff. And secondly, now I would strongly recommend that you should also educate your clients. See, the clients are under an impression that all these things, accounting standard on हमारे लिए कुछ काम का नहीं है. That is not of any benefit to us. It is you are doing it because of your own institute is compelling it. But it should be explained to them that the very first starting point of our report is that it is the management's responsibility. So you should collectively, the most rather common reason or the important reason why chartered accountancy profession is suffering is that we are not united. We are not doing anything collectively. We are not firm on what we want. Finally, we compromise. Finally, we sign anything. And that is the advantage taken by the clients. So if you ask him questions in the course of audit, he will immediately change the auditor. But the next auditor also first has to verify whether he is correctly appointed or not. So remember that if you are doing the work properly, you can be very strict. But if you are not doing the work properly, then you are always under tension, because he can take undue advantage of your vulnerable points, your weaknesses. So if something is not done, sometimes you may do to help him, but he will forget that, because ultimately they conveniently forget that you have done good thing for him or you have taken a risk for him, that they will forget. And once, suppose, for example, you have certified the balance sheet with wrong quantitative details and stocks. Suppose in the income tax assessment scrutiny, if it is exposed, what he will say, I had given it to the auditor. Auditor has checked it, because the fact that you are signing means you have checked it. Whereas in reality, what might have happened is you have just adjusted the stocks, or you have not put it without any verification. So this is a risk that you are always incurring. So please keep away from that. And if you are acting collectively, then he should get a message that if one auditor has not signed, there are other 10 auditors in the locality also will not sign. Unfortunately, our profession, as I always say, that even in the market, the rickshawalas and the bhajiwalas, sabjiwalas are also more. Suppose one rickshawala says no to you, then 10 more rickshawalas will also say no to you for going to a particular place. Then you will have to go somewhere else, and you have to find some other rickshawala for going to that place. This is the reality of life. But chartered accountants, once he refuses, there are 100 others who will immediately jump on that assignment and they will grab that. So this is because of lack of unity, our collective strength is not felt. Our voice is not heard at all. People and the government feel that you are government servants because there are government's laws, you have the work. Otherwise, you will starve. There is no survival for you if there are no laws. And unfortunately, friends, chartered accountants are now running away from the attest function, because they are afraid now that whatever they do, some complaints are there, misconduct is there, and therefore now the new trend is out. Now you have to supposed to report on the NOCLAR. What is NOCLAR? NOCLAR is non-compliance with the laws and regulations. When you are doing the audit, you may come across that labor laws are violated. You may come across that the trademark laws are violated. So many things. Now you cannot ignore those things. Suppose it has come to your notice. Suppose it can come, some pollution control act is violated. Any such thing. How it comes to your notice? In the course of your checking, there could be some notice from the pollution control board. There should be the notice from even the electricity board that you are doing the wrong consumption, or some given wrong declaration, or labor laws. Labor laws is very common. That labor law, there are many defaults. If you are coming across such things, you are supposed to take cognizance. You are supposed to note it in your working paper and go to the management. They are calling as people who are charged with the governance, the duty of governance. So there you have to approach. If it is not there, then you have to approach to the institute. You have to escalate it or go to the regulator. Now there are certain other rules which are also coming. Like if you are receiving fees, which is more from one client for statutory audit, which is more than 40% of your total fees, then institute feels that your independence may be violated. It will be in danger, because your substantial revenue is coming from one client. So it is likely that to retain that client, you may accommodate him and you can do compromises. Therefore, in such situation, how to mitigate that? Either increase your clientele and increase your fees so that this is not 40%, but it is not in your hands. So now what you have to do is you have to inform the institute that yes, somehow this client is having a large fee which is more than 40%. So these are all new things which are coming, friends. Another thing is that if your client has not paid your fees for more than 2 years, then that also you are supposed to now report to the why? Because he has not paid me last 3-4 years. So now just to ensure that my past fees are not endangered, I will have to continue his work, and in that I will compromise just to make sure that he pays the old fees. Otherwise, the old fees are also gone and the client is also gone. Therefore, you may compromise on that. It is something like that you have given a loan to you. But there are mitigating factors. Suppose you can prove that yes, my 2 years fees are outstanding, but it is not that material. My whole total fees are, say, suppose 1 crore. Here my fee of a particular client was, say, 10,000 rupees. He has not paid me for 3 years, but that is not affecting. So for earning that 30,000 rupees, I may not compromise anything. But suppose, imagine that the fee was 2 lakhs and 3 years fees was 6 lakhs. Now in 1 crore, 6 lakhs rupees fee, if it is going to be lost, then I may compromise. Therefore, there are facts and circumstances in which you have to examine this. But these new rules are coming, and unfortunately, we are not updated on that. So everywhere we are becoming vulnerable. Arbitration is the thing with that. Now I'll deal with briefly certain basic aspects or important aspects of the first and second schedule. Before that, let me share with you a very interesting case. I'll also explain to you what is the difference between purely legalistic approach and the ethics. Remember, friends, in as far as cooperative societies are concerned, the working papers. Now, suppose there was a society, and it was revealed that the society had sold some FSI for a large value. Now, there are some disturbed members who wanted to create the harassment to the managing committee and to the member auditor also. What they said, that they will go to the income tax department. They will ask him to issue a 148 notice for concealment, and then assessment, they will pay the interest, tax, penalty, and they will recover it from the auditor. That was their complaint. Because according to them, that FSI amount received was taxable. Now the auditor was a lady. Her reaction was that, how am I concerned? I am not a tax consultant. I am only the auditor. But this is wrong. So there is another standard on auditing which says that what are the other laws of which you must bear in mind or you must take cognizance, like taxation laws. You cannot say that I am not a tax consultant, so I don't see any tax liability. No, you cannot, because even AS22 and all, you are supposed to certify even deferred tax and other things, because you are certifying the true and fair view of the financial position of the entity. Now, if such a large amount is received, which may have a bearing, even a common man will understand that there could be some tax element in that. So if you are ignoring that and you are just simply not taking any cognizance, it is not proper. So you have to take cognizance of all other law like Company Law, Cooperative Societies Act, Trust Act, Income Tax Act, GST, all that, and then upon that depends your contingent liability. Suppose you have committed any default under any other act, then you may be contingently liable for penalty. It could be under even PF Act, because PF Act there are a lot of defaults. So all that you have to bear in mind. So she had two options. One was that if she is herself an expert on taxation, in her working paper, there should be note that, yes, this was the amount received and I have considered it as tax-free because based on these case laws or these are the commentaries from the experts' books and all. So her own working note should be there. Each and every exceptional thing we find, each and everything which catches our attention, there should be a noting in your file. That is working paper. Suppose she is not the expert, she is not confident about the taxability, then she should obtain third party opinion from some expert, because we are not experts in every field, so we have to obtain such opinion. This is called your working paper, or this is called due diligence. So due diligence means I have diligently taken note of that particular transaction, and if I am the authority, I am making a note of myself, otherwise I am involving some other expert. So this is what you are expected to do. Second, I will share with you another case. As you know, there are executor and trustee companies. So executor and trustee companies, they actually execute the wills of their clients. In such executor and trustee company, once one will was being executed, and that deceased person's daughter was coming to the office of that company. And she was saying that the interpretation of her father's will is this way, whereas the officers and the managers were not agreeing with her. So finally, they interpreted it in such a way that she felt that she received less from her father's will. But the director did not respond to her complaints. So what she did, she said that I will teach a lesson to the directors. So she engaged another chartered accountant and asked him to find out the flaws in the financial statements audited. Remember, that had nothing to do with her grievance. Her grievance is that the bill was not properly executed, but whether company's accounts are proper or not, hardly any matters. Still, that other chartered accountant told her, you are not reported on these accounting standards, accounting standard 3, for example, cash flow statement. Now that had not much relevance as far as the true and fair view was concerned. And that had absolutely no relevance with her grievance. Still, she filed a complaint to the ROC. ROC summoned all the directors and also the chartered accountant. Directors explained to him that this is a frivolous complaint. It has nothing to do with her grievance. ROC also accepted that. But he said, now the complaint is there before me. So I have to deal with it. So it was compounded. So composition money of 5,000 each was paid by 4 directors and also the auditor. Everybody was relaxed. But unfortunately, friends, in all such cases, these regulators, where they feel that the gravity is not that high, it is not that serious, it is not a big default by the auditor. Still, in all such cases, they simply forward this as an information to the institute. Just as in the income tax also, suppose it is an exempt trust, but in the financial statement, there is some discrepancy. Still, they will just pass on that as an information. Suppose they feel that it is not that grave, it is not that serious. But yes, it is an irregularity. This is how the information cases arise. SEBI, for example, they write, stock exchange authorities write, or any such regulator quite often writes as sometimes even trade unions. Suppose there is a dispute because under the Payment of Bonus Act, the auditor is supposed to certify what is allocable surplus, what is distributable surplus under the Payment of Bonus Act. So even there, trade unions have also filed a complaint to the institute saying that the auditor did not certify the profits correctly. So you cannot imagine as to from where it can. Therefore, now all those 4 directors are relaxing at home, but this chartered accountant is facing the music of the disciplinary committee for last 5-6 years. So this is how it has become very dangerous. So it is eternal vigilance you have to have. You will be continuously diligent. You cannot afford to be sleepy, or you cannot afford to be lethargic about it. So eternal vigilance has to be there. Now let me go to the part 1. Part 1, as I told you, there are 4 parts in the first schedule. Part 1 deals with the members in practice. So all those items which are there for members in practice. For part 2, it contains for members in the employment. For example, members in employment are taking, say, some kickback. Suppose there is a CFO who is a chartered accountant who is assigning the professional work to other people. In that, suppose he takes some kickback, some percentage, then this is an offense by the member in employment. That is nothing but a bribe. Similar situation, suppose he is also divulging the secrets of that company. That is also another offense. So basically, it is regulating to the employment. Or he breaks the service rules, conduct rules of that employer. So this is members in employment. Third is members in employment and practice. For all it is applicable. That is part 3. And part 4 is the one which is called other misconduct. And in other misconduct, the part 3, part 4. Other misconduct, there are 2 items in part 4. One is that it is basically concerning bringing disrepute to the profession. Both the items are indirectly bringing disrepute to the profession. First item says that if you are held guilty under some other act, and the punishment prescribed under that act is an imprisonment which is not more than 6 months, then it's an item of first schedule, because you have committed something wrong under other act, but the punishment is less than 6 months, therefore it is in the first schedule. If the punishment is imprisonment of more than 6 months, then it falls in the second schedule. Clear about this? The next item is bringing disrepute to the profession. That means all those acts which you bring disrepute to the profession are covered here. And why I told you? Because in the press and in the social media, the defamation is done of the chartered accountants. And therefore, once the profession is defamed, that means all others suffer. And that is why it is in the first schedule, because somebody has done wrong thing. People get an see now. What is the impression of the people? Any scam takes place, they say, what was the auditor doing? And in all these big gaflas which have been found, they are blaming the auditors. The bankers are blaming the auditor, the government is blaming the auditor, and public also blames the auditor, saying that auditor has not done the correct job. So remember that this hampers the entire profession. It spoils the image of the profession. So now in the first schedule, part 1, let me take up a few items. Most important item I told you is, and very common, is clause 8 of part 1 of first schedule. Accepts audit work without communicating with the previous auditor. I must elaborate on this because many people are very much lethargic on this. Many complaints come out of this. Please read carefully. Before accepting the audit, you have to write. What people do is, if the new client comes, they will immediately jump on it and they start the work. And when the signing time comes, that time they remember, array, they had not written, and they loosely call it as NOC. There is no NOC. You have to simply write to him. And who is the previous auditor? That also one has to take care. Previous auditor does not mean only last year's audit. Previous auditor means whosoever was holding that position in the last few years, maybe in the sense that suppose last 3 years there was no audit because of section 44 AD or whatever ADA. For any reason there was no audit or the turnover was not large enough. 4 years ago there was a tax audit. Now again there is a tax audit, then you will have to find out who was the earlier auditor. For he may be there for 4 years ago. And you have to ask the client, who was your auditor, what is his address. So it is your duty. Many chatterers, how would you know? How would you know? You have to ask. Unless you ask, how will you know? And it is client's duty to tell you. If client doesn't tell, then you don't accept the audit. So this is the first case that it should be. Secondly, it is only you who can communicate. You cannot delegate it to somebody else. For example, there was a trust. The fee was just 250 rupees. The trustees came to the new auditor, said that our existing auditor is not helping us. It was belonging to some community. And in that village or in that taluka, there was only one auditor of that community of chartered accountant. So this new auditor said, "Arey, he's there, he's your auditor for so many years." So the person said, no, he is now not cooperating with us. So you please do the audit because now there is a lot of pressure. So he said, no, but I have to obtain his NOC or whatever. He said, you give us the letter. We will go to him for rupees 250. He will not make a very big hype. That was the assurance given by the trustees to that person. And he said, for 250 rupees, why will you go and all that? So this person, poor fellow, in good faith, he signed the balance sheet, and within 1 month's time, he received a complaint from that other auditor. So rupees 250, and that also he did not receive. So that's a different story. For 250 rupees fees, he had endangered his own certificate. Now, remember, that is why you have to communicate yourself. You cannot delegate it. You cannot give it to somebody else. And unless it is received, the acknowledgement is received, you cannot act. Now, earlier, the only mode which was there was registered post. Now they have permitted that you can write an email. But which email ID? The one which is registered on the institute's portal. So on that you have to write and you have to confirm that it has reached him. Sometimes the mails don't reach. You have to ensure that in technology, whatever are the methods available, you have to ensure that it has reached him. So this is the new thing. Now another aspect is there. There is a separate notification or guideline which says that if you accept the audit without ensuring that the undisputed audit fees of the client have been paid, it is a misconduct. What is undisputed audit fee? Undisputed audit fee is the one which is appearing as outstanding in the balance sheet, which is signed by the client. It is deemed to be undisputed. Even today, somebody was asking me, but they have disputed. But I said, once you sign the balance sheet, where the question of you are disputing it. It is deemed to be undisputed. So clients are also careless. Auditors are also careless. But remember, it is only audit fees. And which audit fee? Audit which is required to be done under any statute, like tax audit or GST audit if it was there. If under any statute the audit is done, then that only audit fee is to be. If at all the client is getting the audited only for his own safety or for his own whim, so then that is not, because it is not done under any statute. So if it is in the statute and if it is undisputed, people will say, what about cash method of accounting? If it is cash method, you are a chartered accountant, friends. There are many ways of verifying that, but you should have the willpower. You should have the willpower to verify. You should have the willpower to write to the previous auditor. That we are not doing. We are avoiding it. We are going for shortcuts. Remember, the client will also tell you, see, this is the check we have issued to him, and it is debited also. But remember, the previous auditor may adjust that payment against some other fees. Suppose there is an audit fee as well as tax consulting fee, otherwise some project financing fee. He will say, yes, I have received the amount, but I have appropriated against the other services. So remember, because their receipts are not issued, chartered accountants don't issue the receipts. So you don't know the nature in how he has accepted it. So these are the, and therefore in your letter, when you write to the previous auditor, also ask specifically whether, firstly, don't ask for NOC, only say whether you are aware of any professional or other reason as to why you should not accept the assignment. This is first. Secondly, you have to also ask him whether any of his undisputed audit fee is pending. And thirdly, now they have introduced thirdly, that if there are any important pieces of information that the auditor is aware, which will make you risky for taking that audit, that also you can ask him, and then it is his duty to disclose it to you. So suppose there are some bad things, some fishy things in the accounts, then, and if because of that the auditor is not comfortable, earlier auditor, and if because of that he is leaving, then he should communicate that to you. So this also is now there. Earlier, this was not permitted. Earlier, it was saying that you are disclosing the secrets of the client. So now it is institute has specifically mentioned that in the act that or in the guideline that then that previous auditor is supposed to inform whatever irregularities is coming across, so that the other auditor, incoming auditor, is on the guard. Please remember, friends, all this code of ethics is for our own protection. Don't consider it as it is a burden on us. If people say that as today world is behaving in any manner they like, so let the world behave properly, then we will behave properly, which is wrong thing for a wrong, because chartered accountant is an intellectual leader of the society. So this question was put to Swami Vivekananda, and he said, if you wait for other people to behave properly, it is like standing on one bank of the river and saying that I will cross the river only when the entire water flows away. Remember, it is for your own safety. It is for your own protection that these rules are there, because clients are taking undue advantage of this. They will dodge the fee of someone and they will approach some other person. And then again, they will not pay his fees and they will again go to third auditor. Because of that, you should be united and you should be together. Only then this thing can be avoided. The next clause is that before that there are two clauses, some small, which are relevant, soliciting the work. But now you can solicit the work from another chartered accountant. So there's some relaxation in that. But you cannot solicit the work from outsider. Similarly, you cannot solicit the work by writing a circular letter. Then you write to all the senior chartered accountants saying that I am available and give me work. No, you approach a particular chartered accountant, approach him with a specific letter also, and you can seek the work opportunity. But you cannot mass scale, you write. No, that is not permitted. That is one. Then advertising also. You cannot advertise as such. And what is advertising will depend on facts and circumstances of the case. So, but now sharing the fees with non-member is permitted to some extent. What is that? Rule, the regulation 53A says that with our certain recognized organizations like company secretaries or ICMA or bar council or engineering organization, there can be a multidisciplinary firm. So there could be a firm or an LLP where some engineer is there, some lawyer is there, but in that you cannot accept the attest function. So attest function is you can accept only if majority of the partners are chartered accountants. There are niceties in that. So please read those regulations. But now I am coming to this clause 9, which is immediately after clause 8. Clause 8 is previous auditor's communication. Now here accepts the work. There are 2 or 3 cases which were recently referred to me where the subsequent auditor is simply writing for NOC. But basically, he is not appointed validly. Where is the question of he is asking for NOC because the previous auditor has neither resigned nor has she been removed. There is a procedure under the Companies Act how you to remove the auditor. So if you have removed the auditor in valid manner by following the procedure under the Company Act, then only the next auditor can come. But our auditors are also so careless that under this just the director writes and they accept the audit. So please take care of that. This very onerous burden on you to verify whether your own appointment is validly done. Another thing is that clause 11, where you are engaging in any other business or occupation without permission of the institute. This is very important, friends. Many people are engaged in the share business, F&O. Now, during COVID period, it was permitted, but you can do it for yourself, but you cannot render services of PMS to others. You cannot do the portfolio management service to others. So remember, and any other business, as I told you, the private limited companies were only director and his spouse, they are only the directors. Then it amounts to doing, but it permits that you can be a director simpliciter, or you can be even a promoter and subscriber, but you cannot be an active director. There are many cases where they say my HUF business is there, but still you have to obtain permission, and HUF as such, there are very few genuine HUFs in today's world. There are almost HUF as such is not existing at all, except perhaps some exceptional cases could be there. Otherwise, it is only a fake entity created for taxation. So merely because you are taxed as a HUF, you cannot say, because you have to prove to the institute that this is my really family business. Now there is no one to look after that. My grandfather was doing this, my father had established this business, and there is no one else to look after. Then under certain circumstances, institute may grant you permission. But if you are engaged in another business, immediately you are converted into a part-time practitioner. So part-time practice means you cannot have, for example, even your teaching job. See, there are separate guidelines which jobs can be taken without permission of the institute. In that, teaching job can be taken, or you can be trustee of an honorary trustee of some organization, means social work or charitable work. But if your teaching hours are more than 25 in a week, then you are not eligible for getting appointed or doing the teaching job. So there are restrictions on that. Why this provision is there? This provision is there because there are 2 factors. One is institute feels that your attention should not be divided. Today now you will realize that there is so much of study required. Accounting standards, standards on auditing, and so many notifications, legal provisions, GST, income tax, company law. If you are advisor on that, then your knowledge should be updated and upgraded. So if your attention is divided, then naturally you will be very loose in your knowledge or in your work. That is one. Secondly, in your business, if you incur any liabilities, if the business doesn't do well, then probably that tension you will carry, and perhaps in that process, you may compromise on your ethics. So all these factors are there where you have to be very careful that you are not engaged in other business. Then, next part is first schedule. Next part is undertakes to share the emoluments of the employment. That means he is getting a job and he is sharing the emoluments with somebody else, or accepts any part of the fees which I mentioned to you, like a bribe or a kickback. Then that is that. Then it's generally it is not being a fellow. You are mentioning as a fellow. These are all small petty things. And this also we have discussed in detail. Now, second schedule. Second schedule, clause 4 is important. Clause 4 means that if you express an opinion of a relative, financial statements of a relative, and there is a conflict of interest, earlier law said that you can still sign it if you make a disclosure in the report that this person is related to me. Now even that is gone. So now, if it is related, you just cannot accept that auditor. You cannot sign that financial statement. So this is very, very important now. In fact, very funnily, when I go to the Muffisil area for giving a lecture, people ask me, husband, wife, both are CA, they say whether we can sign each other's tax audit. I said, don't do it, because now your relatives are where, and the relative is defined. Or those where you have a substantial interest, your relative may have substantial interest, or even your partner's relative may have substantial interest. So many things are there. Or perhaps sometimes your partner is a trustee of an organization. Then also you cannot take that audit, because indirectly you or your partner is involved in the management of that entity. So those who are connected with the management, that also. Now there was a chartered accountant who in the Rotary Club, he was doing the audit of the, but his partner was the treasurer of that. So obviously it was a misconduct. But these things keep on happening. But main things here is clause 5, 6, 7, 8. That means you are knowingly making some misstatement. You are aware that this statement is not correct, but still you are not doing any report. Now, for example, there was a trust where 5 bank statements were missing out of 16. And the management told them that these were all inoperative accounts. The auditor accepted that explanation, did not write anything in the report. Finally, bank statements he should write that 5 bank statements were not available. And he may write the explanation that the management has told me this. So whatever view he is taking, he should make it in the report. So that particular thing he did not write. In the next year, the bank statements were missing and were available, and there was a very minor impact of that, because it was a fact that the accounts were inoperative. But still, there could be some minor transactions like bank charges or some interest which is given on the saving account for a trust. Because of that, the subsequent auditor adjusted it in the accounts. He mentioned that adjustment of the previous year, but again did not write any comment in the audit report. Now remember, friends, we are afraid of writing. See, heavens were not going to fall even if you had mentioned that 5 bank statements were not available, therefore we were not sure about that, something like that. And subsequent auditor gave effect in the account, still he did not write anything. And both of them were held guilty, and because the income tax department filed a complaint, although the trust had totally exempt income. Income tax department, because the income tax commissioner had some vengeance against the chartered accountants. So he filed a complaint, and both were held guilty, and both were punished by 3 months suspension. They went to the High Court, because in those days, High Court had the final jurisdiction or authority. High Court reduced it to only reprimand, because it was a technical thing. There was nothing that had really affected. So this is knowingly making a statement, or all these are, but what the most important is clause 7. Is grossly negligent, or is lacking, there is a lack of due diligence. So it is clause 7. And then clause 8, 5 to 9 are all relating to the same category. That means you have not asked for the information, or you have not interpreted the information properly, or all these things are misstatements, which are material misstatements. So that way, then next clause is important, that you have to open a separate bank account for client's money, unless you can prove that it is meant for immediately spending. For example, the client will give you amount to pay his tax. So within a short time, it is going to be squared up. But suppose he gives an amount which is lying there is a long time, and you are making, you are also mixing it up in your transactions. So you have to prove that he had given me 5 lakhs rupees to pay the tax. Now, for example, 15th is the last date for paying advance tax. He gave you on 3rd. Now you are aware that on 10th you are getting your funds. So this 5 lakhs is in your account and you use it up. So if any time your bank balance goes less than 5 lakhs rupees, it amounts to saying that you have used that money. So you may be liable for disciplinary action. So remember this, that you have to show, for example, there are people who have kept it in a short-term deposit. You should not take any advantage. For example, sometimes what happens is the case is going to be long. For example, suppose there is High Court appeal. For lawyers also this is applicable. So lawyers, what they do is they charge the 10 lakhs rupees fees at once. Then there are different stages of the hearings. So that time they create a fixed deposit of that, and actually they earn that interest, which is again a misconduct. So similar thing can happen in our scenario also. So remember this, that client's money you have to keep a separate account unless you prove that it is immediately spent and squared up. For example, they have given you the amount for company formation. Now within a month's time, usually it is used up. They are permitted. But if it is going to remain with you for a long time, then there has to be a separate bank account. Cooperative society audit, as I told you, that as far as possible you avoid, because there are many khadus type of persons or members in a society, and they always are bent on harassing the managing committee and the auditor. So for highly technical reasons, they raise the objections, and you don't earn anything out of cooperative society. Even public trust also, but you don't earn anything, but there is a lot of headache. So as far as cooperative societies are concerned, better keep away from that unless there is a big society and a good earning, but you have to do it very carefully. Then I will end with I just check up whether there are any one or two very important cases that I have missed out, but otherwise I will tell you what is the distinction between a legal manner or legalistic approach and ethics. Because everything, all legal things are not necessarily ethics. For example, I will give you a very live case. What happens in other laws is irrelevant. For example, you have missed out on certain important provisions of the income tax, like section 50C or 56, and you did not give the proper advice. Because of that, the tax comes. And if there is a penalty invoked, that penalty is levied, but in appeal you get it dropped. Now, there are many reasons why in the appeal penalty may be dropped. There could be some highly technical reasons, as the High Court had said that the notice was not properly issued, or it was time barred, or there is some decision, or the government comes out with some amnesty scheme, Kar Vivad Samadhan scheme or some such thing. Because of that, the penalty is dropped. That does not mean that you have given the correct advice. Because the penalty was levied, penalty was invoked, and there was no explanation given by you which was proper. In such scenario, what happens in the law does not have any bearing as far as ethics are, because your misconduct is proved, it is established. So in one particular case, one chartered accountant, with a good intention to help his cousin, the cousin was not a good person. He knew that cousin was not a good person. He issued a check because the cousin wanted to raise some funds from outside. So 10% of the amount, say 50 lakhs check, the chartered accountant gave him. And the cousin went from pillar to post to get the money from financiers, but he did not get anything. But that cousin was not of a good character. So he deposited the check, got it bounced, and filed under section 138 of the negotiable instruments against that his own cousin who was a chartered accountant. Now he was convicted because, and then the case went to the institute, because once you are found guilty under some other law, as I told you, that if it is the imprisonment is there, then it's under the first schedule, it goes to the institute. He has filed an appeal to the High Court. So in the High Court, perhaps he will be acquitted because of the facts and circumstances of the case. And if he pleads properly, the High Court may acquit him. Question is, merely because the High Court has acquitted does not mean that there was no unethical thing. What are two elements of unethical things they were there? What was that? Firstly, he has issued a check when there was no balance in his account, because he knew that the check was not supposed to be presented. It was only to show to the outsiders, people, that chartered accountant cousin has given a check of 50 lakhs. So somebody may feel, "Ki, if he has given 50 lakhs, then I can easily give 10 lakhs. That kind of impression the other person may get. So basically two things. Firstly, there was no balance in your account. Secondly, it would have misled some other person that you have issued a check, and therefore that particular person is enjoying some credibility. This is a wrong impression that other people will get. There could be an element of unethical thing in this. So friends, this was the thing I wanted to share with you. There are many things, many cases which I could not do due to the paucity of time. But I thank the Vijayawada branch, the chairperson, the treasurer, and also all the office bearers and managing committee members for giving me this opportunity to share, because I have taken it as a mission. I've taken it as a mission to spread the awareness, because things are now becoming from bad to worse. Many regulations are coming and we are not very vigilant about it. So there has to be continuous study. There has to be a united action. We have to, instead of just meeting only for academic purposes, you can meet for how we can improvise and strengthen the profession. Otherwise, it is, world study says that due to the automation, these professions are becoming outdated. You already imagine that now banks are getting merged. So the audit is now, scope is less. So also the tax audit limit has gone up. So also GST audit has been done away with. So all these situations may lead to a condition that chartered accountants in practice and may not have sufficient work. Therefore, the new generation is not coming to the profession. Even the children of the established chartered accountants are going away and they just join some corporate or they are joining some big firms. So the future of the chartered accountancy is course as chartered accountancy. And already the number of students we are registering has reduced. So please be aware of all this reality and every day apply your mind as to how we can improve and have collective efforts so that our profession is again restored, its credibility, its reputation is again restored. So thank you very much and Jai Hind.
Dear participants, if you have any doubts regarding this code of ethics and disciplinary proceedings, you can text in chat box so that speaker will address. So there is one query, sir. How to distinguish between fraud and irregularity?
See, that depends on the facts and circumstances of the case, because you have to read between the lines. You have to go beyond what is appearing there. Suppose, for example, that irregularity means it's just a technical default under some law, but it may lead to, that is the skill, that is the insight of the auditor, that where what fraud it can lead to. So this is the interpretation of facts. That, for example, I told you that bank statement was not available. It's an irregularity. Bank statements are always masked. That is also an irregularity, because only photocopies are given. It's an irregularity. But it could lead to frauds, because why the professional skepticism says that why every time they are giving only photocopies of the bank statements, where are the originals gone? So not maintaining the original documents is an irregularity. It is not necessarily leading to fraud. But if you go beyond that and if you get for the third party evidence, for example, say the debtors balances, every time, if suppose the performance or the turnover and the profitability of that organization is increasing year after year in a multifold proportion, then you have to suspect that what magic has happened that this is certainly improving. So then there could be a fraud in the sense that there are circular transactions. Within the group itself, they keep on rotating, inflating the prices, inflating the thing, and GST input credit they are taking. So our government is losing the revenue. So all these things give you an indication as to how these certain things are appearing and how it is just an irregularity in the sense, suppose every time, for example, a fraud detection courses are there are statistical analysis also where from you can get, but otherwise simply a wrong statement, a clerical error. That may not be a clerical error, may not be actually necessarily leading to fraud. For example, there is authority structure, and only a particular person is authorized to sign the vouchers. Now, if that voucher is not signed by the authority, it does not mean that there is a fraud, but it is an irregularity. But when you inquire more and when you bring it, when the extent of such unsigned or unauthorized vouchers is more, then you have to take it up to that authority. Why you are not signing the vouchers? There it may go to the, but merely because it is not signed by the authorized signatory does not mean that it is a fraud, but it is an irregularity. So this is how you have to distinguish. You have to develop an insight in the client's business as to, for example, the stock valuation. Now you have to really see whether what is the quantity, whether this kind of stock can remain at least there in the warehouse. Similarly, the debtors, if you certify the debtors, then you have to also verify in the whether in the subsequent year those recoveries are made. So these are the techniques that you apply. And if there is an error, of course, like double booking of invoice could be there. It's an irregularity, but that does not mean that it is a fraud. Double booking of purchase also could be there. So it could be an innocent thing. You have to see it applied in facts and circumstances of the case.
So one more question, sir.
Hmm.
Can CA share fees with non-CA for GST returns filing other than audit and assurance work?
No, you cannot share any of your fees with a non-member.
One more question, sir. How to identify the malified intent of the management?
That's malified, as I told you. What is the distinction between irregularity and fraud? See, there are certain things which are recurringly happening, or there is a profit, but still the liquidity problem is there continuous. Then all these things, or rather stocks, the stocks given to the bank is different, stocks given to the revenue authorities is different. If that is the situation, then you can say that there could be a malified on the part of the management. So also, despite pointing out certain irregularity, the management is not taking care of that. That is also malified intention, because you are pointing out that these checks, the bank statements are continuously missing. You are pointing out that there are certain checks where the authority, the person has signed, or the vouchers are unauthorized. You are pointing out to the management that for that there is audit committee also. So in that audit committee, you are pointing out still the management is not taking cognizance. So there it can lead to a suspicion that they have malified intentions.
Other question, sir. Nowadays, banks are demanding many unnecessary CA certificates. How can we deal with it?
Correct. You should have courage to refuse it, but ideally, at branch level or at the institute level, the representation should be made to the top management of the bankers that they should not ask for this. See, here there is a role of collective action. But unfortunately, if one chartered accountant refuses, the other chartered accountant does it, that is the trouble. But this is the ideal work or the task of the elected representatives, I would say, the branch or the institute, that they should take up that matter with the concerned authorities for the bank's management and say that no chartered accountant will sign it. If that kind of collective action is shown, only then you can, otherwise, unfortunately, whatever is being done, although irregular, it is happening because the chartered accountants are forced to do it. But once at least you should show the courage by saying that no, it is not permitted for us, like provisional balance sheet, like projections. Now there are guidelines under the standards on auditing where it is that 3400 standard and standard 4410, which deals with how to sign the provisional balance sheet and how to sign the projected balance sheet. It is there. That guideline should be followed. Otherwise, if they are asking anything, for example, they are asking a very funny certificate now. They want chartered accountant to certify that all the laws have been complied with. How can you certify? You are not even aware how many laws are there. You are not aware to how many laws are applicable to that entity. How can you sign? You may at the most mention that nothing has come to our notice that there is violation of any law. But ideally, you should refuse because it is not practical, it is not correct also for it. But as I mentioned in the lecture, that we have not been we have not been taught to say no. Our communication skills are lacking, our strength is lacking, and we have become spineless. And therefore, we concede to the request just for a small amount of money. But the only solution is that to say no collectively. Otherwise, it will continue like that.
One more question, sir. What to do if previous auditor does not file ADT 3?
See, ultimately, if he has committed a default, but if he have already undergone all the procedure for the change of auditor, and he has also issued a letter to him to which he has not either not responded or not given any or even given NOC, then if it is his default, then at the most you can point out to that auditor that if you have not done it, it will be a default on your part and you may be faced with some penal action. But otherwise, you can go ahead with your compliances, provided you have taken care of all the procedural part which I have explained, that your appointment should be validly done, his departure should be validly done. Suppose he has some grievance that you are that I mentioned to you those cases, that he had neither resigned nor he was removed validly, or his fees are unpaid. Only when such cases he can avoid uploading the ADT one. No, otherwise no. Otherwise you go ahead with your compliances and procedures.
One more question, sir.
Hmm.
How to know what all the work tasks to be performed right from the appointment of the auditor till the conclusion of the audit?
There are checklists given. We have institute's guidelines. There are checklists given as to how you perform the audit, what questionnaire, everything is there. In the standards on auditing also it is mentioned. So basically you have to read the material which is there. Institute has also given, and any other organizations like, like Bombay Chartered Accountant Society, where they have given the checklists as to how you ensure that all the things are taken care of. So standards on auditing, on appointment, it is there. Appointment, how you to ensure that the appointment is validated, and then what is the engagement data, everything is there in the standards on auditing. That is why Institute has made it mandatory that there should be compulsory hours for standards on auditing. And you should hold more and more seminars, not for the compliance with the Institute's guidelines, but compliance in the interest of the auditors or chartered accountants. There should be more and more study on the standards on auditing, not just for the sake of becoming 2 CP hours. Is that all?
Yes, sir.
So thank you once again.
I think no more doubts, sir. Thank you, sir, for your presentation and explanation. You explained in such a way that every participant understood this topic. Also, you maintain same energy levels in explanation from starting to ending. It's difficult to explain continuously for 3 hours with same energy levels. Thanking you, sir. Once again, thank you.
In fact, I have been doing it for 5 consecutive days now. This is the 4th day. Tomorrow also. Yes. Thank you very much for this opportunity, and I hope there was some value addition to the participants.
Yes, sir.
Thank you,
Yes, sir.
sir. Thank you, sir.
Thanks a lot.
Thank you, participants, for attending today's session and sign up for today.